Good morning. Welcome to, what is today? The Tuesday edition of the Nexgen Education Room. Nice to see you guys here. Derek, good to see you back. Dab Chain, always a pleasure to have you in the room. K-Pops, it's not just for breakfast anymore. Gary, Safia, nice to see you guys. Lil Saigon, good to have you back. What kind of motorcycle am I staring at in that picture? Scotty Otten, nice to see you. Good morning, Safia. Lady P, good morning. Who else do we have in here? Buck Blue and Ron C, Daniel, Zeba, Alex, Allen. Man, it's like all the cool kids came out of the woodwork to have a great day with me today. You know I appreciate that. Mira Boy, good to have you. Guys, my name is Mark Novak. I teach the education room. You're going to be stuck with me for the next 3 hours. But it's not going to be that bad. We're going to spend a lot of time talking about advantages. We're going to spend an awful lot of time talking about recognizing advantages, taking advantage when there's a statistical advantage. Let's see how many times I can say advantage in one morning. Um, this classroom is designed as a foundational approach to learning, guys, and I can't stress that enough. I want you to write it down on a piece of paper right in front of you that you're new. Just write it real big, Sharpie, big pink crayon, I'm new. And let yourself be new a little bit. Let yourself be okay with not knowing everything in the beginning, because I may be projecting a little bit here, guys, but in my career prior to Nexgen, before I started to go this route, I was really freaking good at what I did. And I was the guy that people came to get answers. I wasn't the guy that was asking questions. And I'm not going to lie, it was a switch for me to go from the role of the person in charge, the guy who knew, to go to the role of the person who didn't know, who had to believe in their heart that they needed to be taught something new. And man, I fought it a lot. So, in the spirit of hoping that you don't have to do what I did, go ahead and write it down, guys. I'm brand new. It's going to take me a little time. But if I keep it simple, it's going to take me less time. And then on top of that same thing, guys, if you post your trades in the class, let's talk about what it takes to be really good at what you want to do, to get to where you want to be, where you told us that you wanted to be, right? When you signed up for Nexgen, you got on this demo, the back of your head, you're going, man, I want a mansion and a Ferrari, and I want it to be on an island, and I can't wait to have a pina colada while I watch the sharks play in the surf, right? That's what I was thinking. But what we're going to do, guys, is we're going to focus on the process that gets you to the end result. We're going to focus on what it's going to take to get you to where you want to be, and the step-by-step path to becoming a confident trader ASAP, guys, begins with you posting your trades in class. It begins with you taking a picture of everything that you do. And I can't stress this enough. If you look at your charts and you have a moment where you're like, whoa, wait a minute, what does this mean? I want you to take a picture. I want you to put it in the room, and I want us to have a conversation about it. This class is designed to be an interactive discussion, not a lecture. It's designed for you to ask everything that's on your mind. And guys, you can't ask too many questions. You can't post too many pictures. Um, Good morning, Zeba. But when you post your pictures, make sure that you're not posting them just to post them, that you're not clicking on your capture button. And guys, this is your tutorial for capture. If I click on this capture button in TechSmith Capture, each and every one of you have this on your computer. This was included with the demo. You may have to search it in the bar, TechSmith Capture. But guys, this is how we're going to have a conversation. This is how you're going to post your trades. And I'm going to go to the live market real quick, and I'm going to click this capture button. If I hover over just one chart, it's only going to show me one chart. But if I left click in the upper left hand corner and I drag it all the way down to the right, and I make sure that I include my prices, I make sure that I include my timestamps, and then I'm going to release that left button, what it's going to do is it's going to give me this option right here. It's going to say, do you want to capture an image or do you want to capture a video? For those of you that are a little further along, start capturing videos of every trade that you take and talk yourself through it. Let me know what you come up with. I think you'll be surprised. But we're going to capture an image. And when I capture that image, it's going to provide me an image preview. Guys, this is our conversation piece. You can use arrows to point things out that you think are of importance. You can point out shapes, right? But the most important tool that you can use is this call out button. And I'm just going to put this on there. Tell me why. Tell me why. Why am I doing what am I do? Why am I doing what I'm doing? Or even more so, and like Gary just said, why am I not? Am I not going long because the trend is the wrong way? Am I not going short into termination conditions? Guys, reaffirm the rules every time, but have this conversation, and just because, and Gary, this is for you too. If you're not taking a short because of the termination condition, that's awesome. You're doing that for you, right? And Gary likes to post these in the room. Guys, you can start a collection of termination conditions from Gary's post, but tell me why. And then once you tell me why, guys, is anyone else getting me cutting out, or is it just Safia? How am I doing? 5 by 5? Everybody's cutting out? I'll tell you what. Give me 1 sec. All right, I just pushed all my connections. Does that sound better? If not, I'll log out and log back in. Sometimes we get little audio hiccups. That is better? Cool. I may have accidentally bumped it on my desk and pulled it out. Sorry about that. Cool. Thank you for telling me. Yeah, guys, if it ever doesn't sound right or you get no volume, let me know. Sometimes it's on my end. And sometimes I get fidgety and I play with cords because I've had too much coffee. And that's okay. So guys, you're going to take this picture and you're going to click copy right down here. And once you click copy, it's going to put it on your clipboard. And you can control V if you're in the pop out, or you can copy paste, but you can put this picture into the room, guys. And this is how you and I have a conversation every day, 15 hours a week, talking about the things that we see. That's the most important thing that you can do. And those of you that aren't doing it, I want you to try it. I want you to give me the rest of the week. I want to see a lot of pictures of what you're doing. You know who I'm talking to, guys. And let's see if we can do it a little better, because what you're going to find is that you're going to start taking better entries. You're going to find that you begin to manage your trades better, because we're going to have a conversation after the fact. We're going to look at your pictures, and when there's no adrenaline running, right? When there's no hope of winning, when there's no fear of losing, we're going to analyze that picture. We're going to see what happened, and it's going to make you a stronger trader going into the next trade. The next thing is to use the spreadsheet that Nexgen provides, guys. It's in your study picks folder. I want you to create a visual diary of everything that you're doing. And the first page of your spreadsheet, I'll pull up my spreadsheet real quick. The first tab is just trade tracking. And it's going to let you put in the date that you took the trade on simulator, what type of trade it was. Hopefully it's a high probability trend trade. How did you feel? Were you coming from a termination condition? What were your trigger lines telling you? How did your targets work out? And any notes that you may have. And you're going to use this spreadsheet not only to track your trades every day, but when your rules are met, you're going to be able to take pictures. And you're going to take those pictures and you're going to put them into your personal trade setup looks. You're going to take pictures of the advantages in place, of the entries, whether it's an actual trade or whether it was a study moment for you. When people in the room post pictures of trades and I say that is the perfect high probability trend trade, steal it, put it into your spreadsheet, guys, and you're going to create that recognition of the highest probability trend trades through the repetition of the spreadsheet. You're going to use that first page, and every morning I want you to go back and study it. So what did you do yesterday that brought you success? Right? What worked? And what didn't work? Because there's always something that doesn't work, guys. For me, I had to do a lot of study as I began to trade the NASDAQ, that when I fight the small triggers on the NASDAQ, and you NASDAQ traders, you hear me say it every day now because I've spent a lot of time and a lot of effort researching this. I know that when I fight small triggers on the NASDAQ, I typically lose. So what didn't work sets me up for success today, because now I've got a giant note on a piece of paper in front of me that says, hey, silly, don't fight those small triggers on the NASDAQ. Let them roll. get to the correct side of them. So that little bit of study every day, guys, I'm going through the same process as you 3 years into being with Nexgen. I'm taking what worked, what didn't work, what felt easy. You know, when you take that trade and you're like, it's going to the next target. I have everything in my favor. I feel good. I'm just going to go pour a cup of coffee, or I'm going to go toast a waffle. I'll come back and see how much money I made. Guys, those are the ones that follow the rules, and the ones that feel forced, right? The ones that make you nervous, that make your heart beat out of your chest. Those are the ones typically where you're breaking the rules, where you're fighting something, where you're using hope as a motivator rather than the advantages that the software provides. So that brief historical study each morning is going to prepare you for the day. It's going to accelerate the learning. And then my job, guys, my sole purpose in life is to make sure that you learn the trigger line and Fibonacci rules for when it's okay to trade. The first hour of every day is dedicated to what we call a high probability trend trade. And that high probability trend trade, let me open this up, comes directly from the Nexgen education page. Come on, Nexgen. There we go. Straight from the tutorials section. And we're going to drop down to those glossary of common terms because I want you to understand just how warm fuzzy this trade should make you feel. The high probability trend trade is defined when every indicator on every chart agrees for the trade, guys. When your triggers are the strongest. When there's absolutely nothing in the way, no termination conditions, there's nothing between you and your entry. Guys, this is the one where angels sing in the background when you take this trade because everything says that that trade has the highest chance of winning, that it's the trade that typically wins 70 to 80% of the time. And your focus on this high probability trend trade, let's go to another page, the 3 trading rules, is going to teach you to read your charts. It's going to teach you to open your workspaces, to look at them, and you're going to fluently understand where the market is likely to continue, and that continuation point is going to be your entry for this highest probability trend trade. You're going to understand where the market is likely to go, and it's going to help you with profit taking, smart targets, and it's also going to help you with not trying to hold for that home run when a base hit makes more sense. And then finally, you're going to understand where the market is likely to stop. And this is what we call termination conditions. And termination conditions are areas that may reverse the market. These are areas that price will react to, that those deep pockets investors are going to react to. It's going to create bounces. It may create a reversal. But what it does is it absolutely robs you of a clear path in that trend, or it's going to provide you an anchor. When these termination conditions do reverse the market, this is the precursor for the highest probability trade that you can take. That reversal coming from Fibonacci is going to set you up for this trend trade that we talk about. And that's the trend trade that typically wins 70 to 80% of the time. And you're going to be able to get all of that through the high probability trend trade. And you just need to learn the rules and embrace the advantages. And we're going to talk about those this morning. What I need you guys doing is simulating those trades. Don't wait until you think you're perfect to practice, right? Get in there and make mistakes. Scramble some eggs or break some eggs, however the phrase goes. Find your limits. Go screaming past them, but post those pictures in the room. And what we'll do is we'll reel you in and get you focused on exactly where you need to be. You and I will have conversations every day until you're sick of having conversations with me. Don't practice the wrong trades. You always want to be practicing the correct rules. How are you going to know as a new user if you have the correct rules? You're not. That's my job. My job is to help walk you through that. We're going to simplify today. We're going to keep it focused on the one trade initially, the highest probability trend trade. What are the looks? What are the advantages? What do they mean for me in regards to a trade? Your ability to read charts from the high probability trend trade is going to open doors for you guys. You're going to begin to take medium probability trades. You're going to start looking for high volume area trades. You're going to be able to catch momentum trades. But the idea is to stay focused initially, to stay focused on that highest probability trend trade. And I can tell you from experience that the people that look for too much too soon typically find nothing. And the people that keep it focused on the absolute best of the best and then grow from that foundation have a much easier transition into becoming a confident trader. You can go back and use market replay. Go back and retest the day. Trade it, pause it, make sure your rules are met, and take pictures, guys. 15 pictures a day should be your goal. At 15 pictures a day, you're taking 75 pictures a week, 300 pictures in a 30-day period. And I can tell you that recognition happens through repetition. Recognition comes through filling out this spreadsheet over and over and over again. And then we're going to repeat this process every day until you're always taking the correct trades. And if you're always taking the correct trades, your win percentage should be in that 60 to 70% range, which means that you're winning more than you're losing, which means that you're capable of making money, which means you're going to go off and you're going to test your trading plan on something like one of those prop firms. Rather than investing $10,000 of your own money into the market, you're going to spend $50 to $100 a month controlling $50,000 in a prop firm, and you're going to see how you react when the pressure is on. Does that make sense, guys? The batting cage is easy, right? There's no fear of striking out in front of a crowd of people. But when you go live for the first time, some of you get those sweaty palms. Some of you get a little nervous. And that's okay. And this is when people deviate from their plans. So we're going to repeat the process every day and build that muscle memory so it becomes easy to stick to your plan. So we're going to focus this morning on a high probability trend trade. And a high probability trend trade has 3 rules. That's it. Whoops, that's the wrong slide. There's 3 rules for a high probability trend trade. In the interest of simplicity, don't try to change them. Don't try to add to them. Don't try to modify them in the beginning. Focus on them for exactly what they are, because each rule provides an advantage. The advantage is what's going to get you into the trade. The advantage is what's going to keep you on the right side of things. So a trade really is nothing more than momentum, a clear path in an entry area. We're going to use these 3 rules that provide these 3 advantages. Let me give you a copy of them, guys. This is the most simple approach to the high probability trend trade. And we're going to recognize these 3 rules on only 2 charts. You will see people in this room with 3 charts. You'll see people with 4 charts. You'll see some yahoos with 5, 6, 7, 8, 9, 10 charts. Simplicity first, guys. Keep it easy first, because if you can't do it well on only 2, how are you going to do it well on 3? If you're not making money on only 2, how are you going to make money on 3, right? So we're going to use a large chart first. This is where your attention is going to go initially every time you open up your workspace. Your large chart will define direction, meaning that the trend of the market will be evident the moment you look at it. Your large chart is going to define momentum. Your large chart is going to define areas, guys. This is a broad stroke of a brush. This is your Wagner power sprayer hitting the walls. And this is the overall opinion of the market. This is what the deep pockets are thinking, right? These are what the people in charge are producing for us. Hey, good morning, Dab. Rules 1 and 2, those first 2 advantages take place on the large chart. Without rule number 1 in place, there won't be momentum. And if we don't have the advantage of momentum, it doesn't matter if we have a clear path, because we don't have that first tool. When the rules 1 and 2 are met, we're going to go to the third, guys. We're going to use our entry rule. And we're going to do this on a smaller chart, a faster chart. And what this smaller, faster chart is going to do is it's going to take 1 bar from that large chart. It's going to take 1 bar that defines direction, momentum, and areas, and it's going to refine it. It's going to break it down into 15 to 30 bars. And this is where we are going to find that area where the market is likely to continue. The information that we get on the large chart is going to be refined into 15 or 30 bars. It's going to allow us to sell a pullback, to buy a pullback, but more importantly, it's going to allow us to reduce risk. It's going to allow us to increase our profit potential by using that simple third rule, that rule for entry. So only 3 rules on only 2 charts. And guys, I want you to embrace the idea that it really can be this easy. My engineers love to overthink it, right? My people in high stress jobs want to create high stress rules. Don't do it. Go with the flow. Relax, take a deep breath, breathe through your eyelids, And let's embrace simplicity, guys. And everything starts with your T3 trigger lines. Everything starts with those sets of lines that are going to help you define momentum. They're going to help you define the trend, guys. And they'd help you define the trend. Those small trigger lines, when they break above the large trigger lines, they're going to paint the background green. When they paint the background green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. When those small trigger lines break below the large trigger lines, it's going to paint the background red. You should only be looking for rules to be met for high probability trend trade short. Guys, the first advantage that you can give yourself is really simply trading with the trend. If everything says up, go long, right? Buy the market. If everything says down, you're looking to go short. You're looking for those rules to sell the market. But once we have that direction, we need momentum. And momentum, once again, comes from those T3 trigger lines. You have small trigger lines, which are the solid, large trigger lines, which are the dashed. And when your small triggers cross up, they break away from the large triggers. Both large and small are angled in the direction of the trend. Guys, this is what we call a strong trigger look. This is when the odds are favorable for the market to continue in the direction of the trend. The small and the large separated like a pair of scissors, opened up, ready to get some work done. Guys, this is the most favorable look for buying that pullback on a smaller, faster chart right to Fibonacci support to continue with that trend, to continue with that momentum. And you'll see those pullbacks on the smaller chart, remember, they look like a tail on a large chart. They look like a wick on the large chart. And you're going to commit from that point where the separation begins until it ends. In a downtrend, it's the same look, going the other direction. Smalls should be below the large. The large should be wide, angled in the direction of the trend. And this is the most favorable look for selling that pullback to Fibonacci resistance to get you into that highest probability trend trade, to give you the greatest chance of success. And what you're going to find is that you're looking for these opportunities from the separation point until they return. It's not for the entirety of a move typically. But there's two of those tails with that odds favorable momentum, and you can see that the market continues in both scenarios. Separation between the large and small, once again, there's two tails there. You will learn how to refine this down to an entry to take advantage of these moves. And if you commit to this odds favorable momentum, it's going to give you a better chance of success, because when those small triggers return to the large triggers, I call this a weakening of the large triggers, right? One is strong, but now they're weak. And when you have weak triggers, anything can happen up or down, guys. The advantage of momentum goes away. It becomes kind of a coin toss, right? It might go up, it might stay down, I don't know. But what you'll see a lot is that when these triggers weaken, it might be right before a reversal. When the small return to the large, typically right before a push up. So this is your little warning signal that the momentum is going away. And then I've got one more picture for rule number one. 90% of what we do throughout the day is waiting for these advantages to be present. 90% is just reading charts, taking the indicators, looking for the advantages. 10% of what you do throughout the day will be grabbing hold of those advantages in place and turning them into a high probability trend trade. So if you start at the left, anything can happen triggers, precede a reversal. Then you get odds favorable momentum. There's one of those potential entries, one of those tails. The market continues up until the triggers weaken once again. And then the market reverses. You get that odds favorable momentum. It continues down. And then we come into a point of indecision. The larger down and the smaller up. The background is green, but the triggers are red. For the brand new user, your commitment to rule number one, to that odds favorable momentum, is going to keep you out of these fighting points where the buyers and sellers are duking it out full force. There is no agreement. There is no odds favorable momentum. So for the new user, there is no trade. This is where a lot of people are tempted to predict what the market will do rather than wait for rule number one. You may say something clever like, well, I think it's going to go up from here, so I'm going to take a long trade without the advantage of odds favorable momentum. And after you get stopped out 3 or 4 times, you're going to get frustrated, you're going to get angry. Let's avoid the frustration, right? Let's let it sort it out and wait for that odds favorable momentum return once again. So guys, that's your first advantage. Odds favorable momentum. The idea that the trend has the most probable chance of continuing. Is everybody okay with that? Especially my new users. Rakesh, Derek, who else do we have that's kind of new in here today? Hey, good morning. Scotty, how we doing? Lady, Nubian man, you're awful quiet, Nubian man. But it's good to have you in here. Lil Saigon, odds favorable momentum, rule number 1, right? Creating the advantage of a market that is likely to continue in the direction of the trend. Does a both chart background has to match the same color? So Rakesh, in order to have odds favorable momentum, your background needs to be green when your smalls are green, when your large are green, and you're always going to trade in the direction of that trend and the direction of that momentum. So it becomes a little bit of a safeguard. You can't have odds favorable momentum if the trigger lines don't agree. Does that make sense? There's a lot of little things in place to really keep you on the right side of stuff. And then there's that picture reminding you that it's okay. Be a little patient. Wait for the separation. Look for the opportunities. And when that advantage goes away, so should your desire to trade, right? So once we have momentum through strong triggers on the large chart, we're going to make sure that we're not trading into areas that may reverse the market. We're going to make sure that the termination is false, that there are no termination conditions between us and our targets. And guys, termination conditions are going to use those same T3 trigger lines, but they're going to use them for a comparison against areas. And the areas that we're going to compare those trigger lines to decide whether or not there is a termination condition present are going to be red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots. We're also going to use divergence highs and divergence lows, guys. And this magenta line that's labeled divergence high, this means that at some point off here to the left, a pivot was created. The market went from up to down, and when it did, it lost momentum. And the same thing from a low, from a divergence low, the cyan prints, when the market goes down to up and the momentum doesn't follow price. So this loss of momentum on its own is not a termination condition, but it becomes an indicator of where the market has the potential to reverse. And we're going to use that with a comparison. And if you're brand new, steal this picture. It's a great little legend on what you're looking at with the charts. But we're going to use a comparison. I'm going to go to the second rule here in the user guide. And we're going to create a recipe to identify termination conditions. And it starts with price reaches an area, your dynamic Renko bars. Nubia man, great question. Actually, it's easy to tell people to do this, but I'm gonna say it. These negative numbers mean nothing to us, nothing at all. They're a byproduct of the calculations that run in the background. But for whatever reason, to get these as accurate as they are, that negative number prints. So I don't want you to focus on the negative number. Like negative 24 isn't more divergency than negative 4. It either is or it is not. If the line prints, then divergence is present. And what you'll find, Nubian man, is you will be able to use it to recognize when there is the potential for divergence. You'll see that negative number flashing, but you'll also see the potential for divergence maybe all the way up through a move. It may always be present, but until that line prints, it's simply potential. Does that help a little bit? So yeah, don't pay attention to the negative numbers. They don't add any credibility, any strength to divergence. When I asked John Novak the same question, he told me, he goes, Mark, divergence is like being pregnant. You either are or you are not. There are no degrees to it. I was like, all right, that kind of makes sense. Um, So let's talk terminations, guys. Price reaches an area. That's the first thing that has to happen. Those dynamic Renko bars reach an area, whether it is support or resistance, right? Those yellow one-to-ones or one of those divergence lines. When price reaches the area, all you have to do is ask yourself, where are my trigger lines? If you've reached support, like we have in this picture, and the trigger lines remain above, they don't break through the area, no more short trades into that area of support. It may reverse the market. It may create an untradeable bounce. But the thing that I want you to get, guys, is price reacts to Fibonacci. Price reaches support, triggers stay above. No more short trades. We've forfeited the advantage of a clear path. Here's one of those pivots with divergence, right? The market goes down, the market goes up. This divergence prints, and it lets me know that the market's losing momentum. Guys, this is a line in the sand, and on its own is not a termination condition. It means that while the sellers were in control, right here at this specific point where that line prints, the buyers pushed back and stole their momentum. Notice that that loss of momentum happens with those small triggers kind of inside. It's when price comes back and reaches that line in the sand, price reaches that divergence low, all of the trigger lines remain above. Now I have a termination condition. Now I have what we call a pivot stop out. And a pivot stop out may reverse the market, guys. And if a pivot stop out reverses the market, if a termination condition creates a reversal in the market, we're going to call it a strong bottom. We're going to call it a good bottom. That's the predecessor to the absolute highest probability trend trade that we teach. These pivot stop outs, you're going to recognize them. They may happen from the middle of nowhere, but when they happen and they correspond with Fibonacci, it adds power to the top here. Here's one of those pivots, but you'll see price reaches resistance. Trigger lines remain below. No more long trades going into that area. And then it pushes all the way back to support, and all of the trigger lines stay above. No short trades into that area. 90%, guys, 90% is just watching your indicators, waiting for these advantages, waiting to pounce when the conditions are right. Price pulls all the way back up to resistance, resistance. There's that divergence high, right? There's that line in the sand. When it's reached, the trigger lines remain below. We now have a pivot stop out of a divergence high. And guys, if this termination condition, or all of these termination conditions at a high, create that full reversal, give you those large going from green to red. The smalls are below, there's separation. There's one of those tails for the highest probability trend trade that we can take, guys. A high probability trend trade that happens after a termination condition is your best of the best. Price reaches these one-to-ones. Notice that I have odds favorable momentum. This market is absolutely screaming in the direction of the trend. I have odds favorable momentum. Everything says down, but it reaches these yellow one-to-ones, and when it does, the trigger lines remain above. Guys, this is a textbook termination condition. This is an area that may reverse the market. We don't know if it's going to, but it may, so the advantage of a clear path is taken away. Look at the bounce it creates. Look at the indecision that happens at these key areas. And then, guys, when this termination creates a full reversal, large go from red to green, I end up with that odds favorable momentum. There's one of those potential entries for that highest probability trend trade. So when we look at termination conditions, I'm going to give you two pictures. I'm going to give you termination conditions from a high. And you're going to see that process again. Here's one of those pivots, one of those divergence highs. Not a termination condition, just a loss of momentum. But when price reaches the divergence high, the trigger lines remain below. Now it's a termination condition. And if this termination creates a full reversal, we're going to call it a strong top. Price reaches resistance, trigger lines remain below. No more long trades into the area of resistance. Price reaches resistance in one-to-ones. Trigger lines remain below. Absolutely no trades into that area. Guys, this is your safeguard. Your rules are designed to keep you safe. They're designed to give you clarity when the advantages are present. There they are from a high. Let's do the same thing from a low, guys. Price reaches those 1-to-1s. Absolutely no trigger lines break through. You know without question, no more short trades into this area. There is no clear path. When the termination creates a full reversal, we're going to call it a strong bottom. Same thing from support. There's one of those pivots, not a termination. Until price reaches that low, now it becomes a termination because the triggers haven't broken. So guys, do me a favor, give me a Y in the room if you're with me. Price reaches the area. If the triggers remain above support, below resistance, sit on your hands, right? There's no reason to sit and hope. There's no reason to have any desires of trading into that area. Let it break. So what's it look like when an area breaks? If no triggers through means that there's no clear path, then both small and the large breaking through the area, now we have a clear path, guys. Small triggers get above resistance, large triggers get above resistance. You can see that it begins to behave as support. This is your clear path. Notice that there's odds favorable momentum and a clear path, rules 1 and 2, and one of those tails is present. So as a brand new user, I want you to keep it simple, right? Either the path is clear or the path is not clear. Let's not overthink it. This is step 1. This is kindergarten. This is getting that foundational approach to understanding when an area is likely to break or when it's likely to hold, guys. And if you go back to the market, I want you to see the power of Fibonacci, not only to stop a market in its tracks. 1-to-1s, triggers don't break. Look at the bounce, right to resistance. Rule number 2 is going to keep you out of a consolidating market because the rules aren't true. Support holds, resistance holds, guys. It keeps you out of a consolidating market. It keeps you from getting chewed up. And then you simply wait for that path to be clear. And there's those tails, there's those tails, there's those tails, all the way down. So the idea is that these advantages set you up for success. These advantages give you a little bit of clarity of when a statistical advantage is present. And you're going to do that with momentum, and you're going to do that with a clear path. And guys, I'm going to show you one more scenario where a small chart can help you see change that you won't see on a big broad stroke of a brush, right? When the market has a clear path but seems to go up, or the market has odds favorable momentum and a clear path but suddenly seems to go down. The only termination condition that I respect on a small chart is 3 divergences in the same location. 3 divergences in the same price range may terminate the trend. Because we've lost momentum 3 times, you're going to see it on the smaller, faster chart. Remember that all of this may only be 1 or 2 bars on the large chart, but 3 losses of momentum in the area may reverse the market. It becomes even more powerful when we take a lesson about momentum. When we go from odds favorable to anything can happen, it adds strength to the possibility that it may reverse the market. And then when that final pivot, that third pivot, is higher than the previous, it adds even more strength to the idea that these 3 divergences may reverse the market. And you're going to see this look at a low or this look at a high when your large chart is losing that momentum but hasn't had enough bars to show you. So guys, the only termination condition that I respect on a smaller, faster chart is going to be 3 divergences. You're also going to be able to use this chart reading, these 3 divergences, to help you manage a trade. If you're in a short, if everything says down, your large chart supports it, but 3 divergences print, it's going to give you the opportunity to manage out of that trade, to preserve your equity, to keep the powder dry, so to speak. Let it do what it's going to do, and then simply wait for those advantages to be present again. So the advantage of momentum defined through the trigger lines, right? The advantage of trading with the trend defined through the background color. The advantage of a clear path through your understanding of termination conditions. It's only 2 rules. It's 2 simple concepts. Guys, most of you are going to have this down within the first couple days. Now it's time to get paid, right? Now it's time to take those advantages and turn them into a trade. And that's when we're going to turn our attention to the smaller, faster chart. That's when we're going to look at that entry chart, and we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. That's our phrase, guys. That's the phrase that you're going to write on your chart. We're going to buy or sell an area inside of favorable large triggers, but we're going to let the market come to us. And here's why we use those two charts. And I love this picture. John Novak put this together for me. The large chart defines areas. The large chart defines direction. The large chart reflects the large crowd opinion of the markets, what everybody says is going on. Between these two areas is when the advantages are present, when the large chart says go, go, go. The small crowd forces a pullback. Rule number 3 says that we are going to buy or sell a pullback at an area inside of favorable large triggers. These yahoos that want to fight momentum, these yahoos that want to fight the trend, are going to get us to our perfect entry. They're going to push us back to the area where the market is likely to continue. So we trade with the large chart, we trade with the momentum, we trade with the direction, and then we take the fighters to get us the best of the best entry. And this is the look. Joel, I never speak in absolutes because, and I like that you said that. Guys, I don't tell you how to trade. I tell you how to recognize advantages, and I give you a simple path for entering the market when the advantages are present. So what I am saying, Joel, is that when 3 divergences print in the same location, what that means for me is that I've given up the advantage of a clear path. And if my job as a trader is to be successful, does it make sense to take a trade into an area with 3 divergences without the advantage of a clear path? You have to make that decision, guys, and there may be times when you do. But remember that we're starting on day 1 today. We're starting at the best of the best, the highest chance of success. And if that's your goal, well, 3 divergences takes away a whole third of the advantages that you're looking for, right? 1, 2, 3, coming right from support, right from a termination condition. And look what that market did. Guys, you identified where the market was likely to go. Termination conditions told you where the market was likely to stop. Trigger lines tell you that you have an awful lot of momentum right now. How do we take advantage? Well, we do that with rule number 3. Rule number 3 says that we are going to buy or sell a pullback at an area inside of favorable large triggers. Rule number 3 has us looking at a smaller, faster chart, refining that broad stroke of a brush. And when the rules are met on the large chart, in this case an uptrend, this is the look on your small chart. Strong triggers, small's outside of the large are wide. They're angled in the direction of the trend. And we're going to buy or sell. We're going to use a limit order. We're going to wait for the market to come to us when that small crowd fights. We're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Let's define favorable large triggers first. Favorable large triggers means that you're large and you're synthetic. The smooth large triggers that are native to the 5-1 and the stepped large triggers that come from your 13-2 chart. On your smaller, faster chart, guys, when they're one on top of the other, when they're overlapping, when they're working together, this is what we call favorable large triggers. They're wide, they're angled in the direction of the trend, and they should be overlapping. What this does for you, the new trader, is it's going to give you the absolute smallest point where the market is likely to continue. It's going to give you the least amount of risk as you get into a trade. So favorable large triggers are where the areas need to reside. The areas that a trade will come from can be Fibonacci support or resistance, it can be mid-bands, or it can be yellow 1-to-1s. And the key is that they reside within those favorable large triggers. So when your large chart says up, when your large chart says momentum, when your large chart says clear path, you're just going to focus your attention on these favorable large triggers and the areas that may fall within. You've made the decision that it's time to take a trade. But our rules say that we're going to buy a pullback, a small retracement in price counter the underlying trend. And that pullback begins when the small crowd fights. This reversal bar signals the beginning of a pullback. Once again, you're going to turn your attention down to those favorable large triggers, the areas that may fall within, and you are going to create a window of opportunity, the area where the market is likely to continue. And that area of opportunity for long trades will extend from the highest point of support to the lowest point of support inside of favorable large triggers. If it's a short trade, it will extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. And the idea is that right at the top of that window, because of the momentum, because of the clear path, you're going to right click on your chart and you're going to activate a limit order right at the top of that window. And one of two things are going to happen, and I'm going to take a picture so that we can mark it up a little bit. There's only two options. The market's either going to continue off in the distance with all that momentum and you're not going to get a trade, or it's going to get to that highest point of support, at which point you're going to enter the market. You're going to be long. You will have just bought the market. But here's the cool thing, guys, is you just bought the market not because you hoped it would go up, not because you wanted it to go up, not because you think it's going to go up, but because your advantages were present. Your large chart said that we were in an uptrend. Your large chart said that you had the advantage of momentum. The large chart told you that the path was clear. And your small chart told you exactly where that market is likely to continue. You have the three advantages, and you're now in a long position. We're entering at the top because of the momentum. But guys, every time you enter, I want you to be full aware that it may go to the bottom of that window, right? On a long trade, if you identify the top of your triggers to the bottom of your triggers, we know where we're looking for areas. But the window of opportunity extends from the highest point of support to the lowest point of support, kind of the box within the box. I know that it's likely to go from the top because of the momentum, but I also fully understand that it may bounce from the bottom because it is a window, right? It's not an exact science. We're good, but we're not that good, right? It's a window. Your initial stop will go below that window of opportunity where the market shouldn't go. Because if it does, if it extends beyond that window, well, now we no longer have the advantage of the entry area where the market is most likely to continue. And we're going to have a protective stop waiting for it. And we're going to exit that trade, and we're going to be okay with it because of the advantages were in place, the statistical advantage that our rules supplied. And I want you to go ahead and get this in your head on day one. Whoops. 70 to 80% winners mean the market will be wrong. How do you like that? Let's use that. The market will be wrong 20 to 30% of the time. Right? 20 to 30% of the time, guys. Every 10 trades, I want you to go ahead and mentally be ready to not win 2 of them. It's okay. It's a normal part of a positive equity curve. But 70 to 80% winners means that 20 to 30% of the time that stop is hit. It's a protective stop, right? It's going to help preserve equity because you don't sit and hope. You don't let that market continue down, hoping that it goes back up. We're out of the trade, and that's okay. That's part of it. I want you to not feel as though losers are failure. I don't want you to worry about whether or not it wins or loses in the beginning. I want you to focus on getting in at the best spot. And when you get in at the best spot, I want you to know that the advantages were in place. And guys, I want you to get so comfortable with the idea that these advantages create a situation where you win more than you lose, that you never miss this opportunity, because 70 to 80% of the time, this is my result. Once that reversal bar prints, I'm going to move my stop below it. I'm going to reduce my risk even more. I have every advantage in place. The market's going where it said it was going to go. And everything's doing exactly what it needs to do. Guys, this is your beginning trade. This is your first trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that the only thing you need to do for your first week with Nexgen is go back and study it, right? Get comfortable with it. Get comfortable with the idea that when the triggers are strong and the path is clear, you can circle one of these tails on a large chart. And if it lines up with support inside of favorable large triggers, you know that you have a high probability trend trade long. You know that you have the best of the best, the advantages in place. When the rules are met on the large chart and the reversal bar prints, you know that the area inside of favorable large triggers is your best chance of success. And you can embrace these ideas, right? Here comes the pullback right off the mid-band, straight to the next area. Here comes the pullback from the top of the window straight up to the next area. I want your first 30 days with Nexgen to be focused on entries, guys. The absolute best of the best entries when the advantages are there. And I want you to see, NASDAQ is moving, isn't it? Let's see what it looks like if I circle one of these tails with odds favorable momentum. And I'm going to scroll back. That was at 931. Pulls back to an area of resistance inside of favorable large triggers. Goes a little bit beyond. But that's the look. And as the market continues down, if I move the circle at the tail end of momentum, it does it again. And guys, you're going to see this over and over. You're going to see it on every market. You're going to see it on every time frame. You're going to see that odds favorable momentum. Whoops. You're going to see the market coming down. You're going to see the clear path, and you're going to be able to identify the area inside of favorable large triggers, that area of resistance, that mid-band, and that's going to be your entry right off the get-go. That's going to be your highest chance of success. That's going to be the one that you're going to focus on. And when you focus on that entry, I have a brand new template on here with no stops, no targets, anything, which is a horrible way to trade. You're going to identify where that market is most likely to continue, and you're just going to go through this process every day, making sure that you learn how to embrace the advantages, that you can take that best entry. Reversal bar prints, the market begins to move down, right? And look what just happened live, right in front of you. Odds favorable, clear path. There's your entry, and that market's heading down. Pretty amazing, right? 100% live in front of you. Guys, take that picture and fill your spreadsheet. Become clear on what it is that you're looking for. Let me give you my spreadsheet right now. Brand new users, there's my spreadsheet. Guys, excuse me just one second. I'm going to pause for just a minute. I'll be right back. All right, sorry about that, guys. Rule number one is always say goodbye to your wife, right? All right, so here's my spreadsheet, right? 250 pictures of rules-based entries, guys. 250 pictures for you to click on to study, to create a little bit of clarity, right? A little bit of recognition through repetition, simplifying and learning the looks so that they become easy. That's the goal. I'm also going to give you a high probability trend trade checklist. Guys, I'm going to give you every tool that you need to be successful with this software. This high probability trend trade checklist, guys, is going to talk to you about the conditions that need to happen to find the perfect entry. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? If it does, check yes, right? We'll use the highlighter. Here we go. It's a yes. Sorry, guys. Thank you. So let me back up a little bit. I gave you the spreadsheet, right? 250 pictures. Guys, start studying these looks so that they become easy. And that's where I went to this picture. Study the looks. Learn the looks so they become easy. Repetition, 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 repetition. Can't stress it enough. And then here's your high probability trend trade checklist, guys. What has to happen to enter the market? That's it, just to get in. Is the market coming from a good top or bottom? Guys, this video that's attached to it is a fantastic video to help you recognize termination conditions. Do I have strong triggers on both charts? If it's a yes, then I look for those termination conditions. Are termination conditions not true? There's nothing that may reverse the market. If it's a yes once again, then I'm going to turn my attention to the smaller, faster chart. Do I have an area inside of favorable large triggers? And if this one is a yes, guys, that's my trade. That's my high probability trend trade. That's my best of the best. This is the one that's teaching me to read my charts. This is the one that's teaching me to recognize advantages. This is that solid foundation that I'm going to grow from so that I can become a confident trader. I've never had anybody, and guys, this is a true story. I've never had anybody follow this checklist exclusively to the letter and do worse than 70% winners. So maybe ask yourself, if you're not where you want to be trading yet, right? Maybe your win percentage is 20 or 30. Maybe you're struggling. Maybe you're shooting for more rather than better. Back it up a little bit, guys. Simplify it a little bit. Get that absolute best of the best. One great day is outstanding, right? I made $1,000 today. I'm the best trader ever. Can you make $500 a day every day for the next 30 days? That's what makes you successful for a lifetime. I'm going to give you the same checklist, right? The same verbiage, the same rules, the same conditions. But this one has pictures that I liberated from the study materials. Can't stress it enough, guys. Anything and everything that you need, I'm going to give you. All you have to do is study until it becomes easy. Everybody's on a different path. Everybody has a different time frame. Most people have a good top or bottom, a termination that creates a full reversal. You'll have that in the first week. Odds favorable momentum, typically day one. It's not hard to recognize, right? It's harder to commit to. Termination conditions, there's your recipe right there. Window of opportunity might take a couple days, right? Because you might get distracted by things around those favorable large triggers. By the end of the first week, if you keep it simple, if you keep it focused, guys, there's no doubt in my mind that you'll be able to go back and you'll be able to recognize these advantages and you'll be able to take a high probability trend trade. It will become easier if you post pictures, if you ask questions, if you seek clarity, if you make sure that what you're seeing is the right thing to see. So guys, this is your high probability trend trade, right? Couple checklists for you. And now I'm going to provide you, once again, to stay focused, let me give you a simple plan for consistency. Let me give you the best of the best looks and write it out into a trading plan, something that you can commit to. This becomes your trading Bible for the first 30 days. And it begins with never fighting the large chart direction, guys. Never fight against the big crowd. It's rare that you win. Don't fight against the momentum that the large crowd creates. Don't fight those trigger lines. And then define your entry. Notice that it says entry. That's what we're doing. Just type it in, Paul. Literally type in CL09-23 and it'll roll it for you. It's so easy. Never fight direction, never fight the triggers. Guys, let the checklist be true. This is your entry. Right where it tells you what the contract is. So Paul, let me get to a chart. Literally right here, you're going to be able to type it right in. NASDAQ's moving, isn't it? There's a mid-band right inside of favorable large triggers. Gosh, not again. Odds favorable. No terminations. I know it's super easy, right? Even a caveman can do it. So guys, focus on your entries. Learning to day trade is like eating an elephant. If you try to do too much, it becomes overwhelming, right? There's too many things to think about. This gives you 4 things to think about, just focused on an entry. It is mechanical, right? It's checklist based. It's methodical. It's the same thing happening over and over and over. You can actually create a little bit of a rhythm, right? And it's pragmatic. It embraces advantages rather than opinions. Well, once you learn to enter the market, you're going to have to do something with it, right? So this super simple plan also provides you a management opportunity. Every great entry, guys, every rules-based entry creates a manageable trade. Mira, I put them in the room. Let me do it one more time. So if you look in the chat box, I'll put all 3 together right below your message. You can either click the download button, and what that'll do is it'll let you download it into your downloads folder, or you can literally click on it and you can drag it onto your desktop so that you have it. And you can do the same thing with the spreadsheet that I put in there. So let me put the spreadsheet in as well. I'll put them all in one place so it's easier. Whoops. And if you have any trouble with that, all you have to do is let me know. I'll email you copies. It's no problem at all. Every great entry creates a manageable trade, guys. Every great entry creates a management opportunity. The management side is the second step. You've identified your entries, you're in the market, the absolute best of the best, and now it's time to do something with it. And what we find is that that same mechanical approach, right, that same pragmatic approach that you took with your entries is advantageous as a brand new user because you're learning to read your charts, right? But the idea is that you have a plan capable of making money within the first 10, 20 days if you follow it as your education grows. So your initial stop is going to go outside of that window of opportunity. Every trade you take, you'll take the perfect short right at the mid band, right inside of favorable large triggers. And your stop will go where the market shouldn't. Typically 12 to 14 ticks in a futures trade. It's going to be more than that if you're trading the NASDAQ because the NASDAQ is a little busier, moves a little more. But that initial stop is in place, the entry's been taken, the rules have been met, and now there's absolutely nothing for me to do. Either this trade is going to go up and it's going to reach that area where the market shouldn't go, and if it does, that's cool. It's a normal part of trading. It's a cost of doing business. It's one of my 20%. But it's more likely to provide a reversal bar. And when it provides this reversal bar, you're going to minimize your risk. You're going to move that stop a tick or two above that reversal bar, right? You went from like 14 ticks to 8 ticks, saving a little money. And there's nothing for you to do at this point either. I don't need an opinion, right? I don't need a hope, a wish, a want. The only thing that I have to do is either let the market hit my stop. I'll take a small loser. That's okay. It's going to happen. Or it goes straight to my first target, my conservative target, $100. Those are my only 2 options. Pragmatic, right? If then. If it reaches that first profit target, guys, that's $100 in the bank, $100 in my account. There's a dopamine kick. There's this confidence that comes through the memory of success, right? And I'm going to move my stop to break even. And at this point, there's nothing for me to do again. I roll my chair back, my hands go in the air, and it either hits my stop at break even, which really, who cares? It's break even. That gives me the comfort and the confidence to see if it reaches my second target. And if it reaches my second target, then I just took a $300 trade, guys. I took a trade that had momentum. I took a trade that had a clear path. I took a trade that had an entry inside of favorable large triggers. It reached both of my targets and $300 in the bank. And at this point, I don't care what happens next. It's not my money anymore. $300 a day doesn't seem like a lot, right? 300 is kind of, I guess I could do something like that's a $1,500 week, guys. That's a $6,000 month. That's a $72,000 year based on the highest probability trend trade, winning one of those a day, right? Waiting for the advantages, sitting on your hands, doing nothing until it's time to do something. Well, eventually, you start getting really comfortable with that high probability trend trade, and you start trading a 10 lot, right? And that 10 lot turns in almost $750,000 from the exact same trades, from the exact same conditions, from the exact same entries and management style. The idea isn't that you take all the trades. It isn't that you catch every move. Mira, there's a lot of people love to trade from 9 to noon, right? The markets are open, they're moving. There's a lot of movement going on. I watch the markets pre-market sometimes because I'm teaching this class during the day, and I only trade after noon Eastern because my class doesn't end. And I find opportunities every day. So the best time of the day to trade is when it's convenient, when you're focused. But you'll typically find that the rules are met throughout the day. But from 9 a.m. to noon, it's great. But if you can't be in front of the market from 9 a.m. to noon like me, I can tell you that from noon Eastern till about 4:15 Eastern provides an awful lot of opportunity as well. All right, y'all. So you have your rules, right? You have your entries. That's it. Just follow the rules. I'm so glad you say that. What if your only choices every time you looked at the market, what if your only choices for getting in were the one thing that you could control? What if it were either rules met or rules not met? What if it didn't revolve around what you wanted, the money you thought you needed to make? What if it didn't revolve around anything other than waiting for your rules to met? Wouldn't that take a lot of pressure off of you? Wouldn't that do wonders for keeping you focused on the best of the best? Wouldn't that make it so all you had to do is find a termination condition that creates a full reversal that gives you all that momentum and wait for a pullback to support inside of favorable large triggers? Guys, the only thing you're focused on for the first 30 days is entries, right? The only thing that you're focused on is that simple recognition of where to get in. And then from there, you're going to focus on management. And you're going to keep it simple, and you're going to keep it pragmatic, and you're going to keep it without hope or fear. And you're going to post everything that you do into this classroom so that we can talk about it. And I made this picture this morning when the NASDAQ was caught between areas, when the NASDAQ wasn't giving any rules-based trades. I thought this is a great opportunity for me to make a picture for the class, and I'm going to share this with you. 90% of what you do is waiting for advantages, guys, giving you an edge when you enter the market. Your rules are designed to give you clarity when the advantages are present. The rules are designed to help you see exactly when you have an edge. And your rules, more often than not, are going to keep you from trying to predict market movement. When the market is caught in a channel, when support and resistance are holding, and you never get that odds favorable and a clear path at the same time, you don't have to predict. All you have to do is sit on your hands and wait. Let the areas of consolidation break, guys. Let them get clear. Let that path be clear. And the idea is that you embrace that doing nothing is the right option when there's nothing to do. You tell your brain it's okay to be doing nothing because there isn't a statistical advantage. And John and I were talking this morning as the NASDAQ did this. And it was fun because we're like, well, let's just chart read, right? And we'll do that together. What do you see? What do I see? And we're like, well, I can see a reason for the market to go down because of the terminations. And he goes, man, I can see a reason for the market to go up because of a couple higher divergences. And it was funny because we were both right. I was absolutely right that that market had the potential to go down from a termination condition. And he was absolutely right that the market had the potential to go up because of the higher divergences. And it was kind of cool because neither of us had rules met, and we both gravitated to opposite sides of the coin, both which were correct. And we're like, man, I guess we're just going to sit on our hands and wait. And that's exactly what we did, and neither of us got chewed up when the market wasn't giving us a clear path. But you're going to see one side of the coin, right? You may see shorts easier than you see longs. You may see longs easier than you see shorts. What I want you to focus on is seeing the rules met, seeing the advantages in place, recognizing them on markets, knowing that termination conditions take away the advantage of a clear path, right? And there it is. And look what happened from the termination condition. Understanding that every move isn't your move, that every move down isn't necessarily yours, that every move up doesn't necessarily mean a payday for you. Waiting for those statistical advantages. So guys, I'm going to ask real quick before I take a break. Is everybody comfortable with the idea that a high probability trend trade can set you up for success as a brand new user, can give you a set of rules that win more than they lose, can teach you to read your indicators, can allow your brain to focus on simplicity, and then from that point, we're going to open every door. And a lot of you, and some of you have done it, and guys, do me a favor. I'm going to do it. I'm going to be the first to admit it. There's my hand up. I thought more was better. I thought more trades meant that I would make more money. I thought that taking every trade would create a higher profit margin. But the reality is that when I take a deep breath and I focus on simplicity, my win percentage goes up. My P&L was growing. The best of the best is better. And we're all going to come to that realization at a different time. But I'm going to keep saying it over and over. And I hope that you believe me, guys. I hope that you embrace simplicity and that you get to where you want to be faster than I got to where I want to be, because I fought it for a long time. And this class is designed to help you not make the mistakes that I made, right? This class is taking everything that I had to learn through trial and error, through pain and suffering, and giving you a clear path to your objectives. Price reaches resistance and absolutely no trigger lines break through. No long trades. Price is at 1-to-1s and none of the trigger lines are through. No short trades. Guys, let the areas break. Let the consolidation stop. Let the path be clear, let the momentum be advantageous, and then strike when the iron's hot. I'm going to take 5 minutes, guys. If you have a question, post it in the room. If you have a chart, post it in the room. The second and third hours of this classroom become more interactive. I want you posting charts, asking questions. I'm going to go back and look at the charts that you've already posted, and I'm going to answer any questions that you have on them. We're going to talk about what you see, what you don't see, rules met, rules not met. And we're going to work together hand in hand as we walk down this beach of life, getting you to becoming a confident day trader. I'll be back in about 5 minutes. Rule number 2, right? Keeping us safe in a range. Keeping us safe in a range. Gosh, I love rule number 2. All right, y'all. I'm going to go up and I'm going to scroll to the top of the chat box. We're going to start clicking on the pictures that you guys posted and start talking about the things that you see. Joel got us going here. Notice that at the bottom of Joel's picture, he has a checklist. When you're annotating charts, when you're presenting charts, you can either type on the chart, right? Write your rules on the chart. Write that odds favorable momentum, that no terminations, your area inside of favorable large triggers. Guys, this is how you're going to get the absolute best feedback. And then the other option is if you have Snagit, if you paid the $62 for the bells and whistles, you can literally have a checklist down in your recents and you can drop it directly onto your chart. And that's a pretty cool little trick that you can use. So Joel drops it right on. He has odds favorable momentum. He has a termination that creates a full reversal. There's no divergence. And look at this. He takes a pullback directly to support right there at those large triggers, and off it goes to Profitville. Joel, beautiful trade. Picture perfect, everything that we look for in a trade. If I were a brand new user, I might right-click and steal that link, right? Copy that link that Joel presented the picture with. I'm going to come to my spreadsheet and I'm going to go to my favorite looks section because my favorite looks are the looks that follow the rules. And I'm going to create a hyperlink here. And I'm going to paste the address in the address bar like I'm going to Google or eBay. And under text to display, I'm going to put Joel's perfect trend trade long entry. And I'm going to be able to come back and I'm going to be able to study this one. Gary got us started reminding you guys, Gary, thank you for this, that crude oil has rolled, guys. We've gone from that 08 contract to the 09 contract. If you need help with that roll, raise your hand. NinjaTrader 8 does it automatically. NinjaTrader 7 is a little more work. It's not difficult work. But NinjaTrader 7, let me just show you right here from the software user guide. If you need to roll contracts, let me figure out where that was. Adding symbols, rolling contracts, market analyzer. Guys, there it is right there for you. It's going to help you do that. So Gary's just reminding you, hey, guess what? Contracts are rolling, guys. Be on the right contract. Be where the volume is. And then he's also the king of taking pictures, even when the rules aren't met, reaffirming those great rules, right? Identifying that even with odds favorable momentum, the market's trading directly into support, right? Right into one of those pivot stop outs. It's a termination condition, nothing to do. So take that picture, right? And say, hey, when there's absolutely nothing to do, I'm going to do nothing. And rather than try to fabricate a trade, I'm going to identify the problems that are in my way. Gary, great job with those. And then John Novak, I love this. This is a study tool that John put in the room this morning for testing purposes. This is your large chart. You can do a little and take off the large triggers and see what happens if you only trade in the direction of the small triggers. If you're always patient and let those small triggers be in the direction of the trade, guys, this is going to keep you focused on being in the direction of the market. It's going to keep you focused on being where that immediate momentum is. And this is also going to get you to start looking for those next trades, those trades that are going to show up outside of the high probability trend trade, those high volume area trades that you can learn. It's going to help you identify those momentum style trades because you're always going to be focused on trading on the direction of the small triggers. So thank you, John Novak, for that little addition. It's a great study tool. Notice that he didn't say keep it like this, right? This is for testing purposes. Go through and see what you're doing as you study, right? Gary, terminations. Once again, two divergences on a 50-50. There was a market flow signal in there, but it's directly into fibs. It's directly into, yeah, smalls didn't break. Just trading in a range, and that's exactly what it was doing, Gary. It was just trading in a range. Three divergences from the same location. Says don't go short. Directly into resistance. Says don't go long. Sit on your hands. Wait for advantages. All right, Derek. Derek, remind me how long you've been with us. It can't be more than a couple weeks, right? Two weeks. So, Derek, I want you to do something for me. I know why you did what you did, right? But let's make it repeatable. Let's make sure that you know what you did every time you do it. Get in the habit of writing those rules on the chart. It really will. It'll change the recognition level for you. Guys, the market is coming off of that resistance, it looks like. Maybe not quite. Everything says down. The triggers are down. The smalls are outside of the large. The path is clear. And I'm just going, yes, yes. And look at that entry. It's a little late, right, Derek? And let me tighten this up, and I want to see it. Yeah. So you're building trust right now. It's scary to sell the market when it's coming up to you, isn't it? It is for a lot of people. It was for me. So this is where the annotation, using that call out, if you don't put anything else on this chart, Derek, because your large chart read is perfect, take the time to type out, my entry should have been at the area inside of favorable large triggers. And why are you doing that? Because you're reminding yourself that this entry at 69.9 instead of 68.7, best entry was 12 ticks, less risk. Best entry was 12 ticks, more profit. Why do we get in at the best of the best? Because it reduces our risk dramatically. Because it gives us more room to that next target. It's still a fantastic trade. So you don't need to buy snag it. Derek, type it out, man. Because it's that typing that's going to reinforce. It really is, guys. For new users, having to take the time to type this out. Because you know how many times I see this checklist come up? And people are like, I took a trade. And whether the rules are true or not, they're like, well, I used the checklist. Well, yeah, but you used it ineffectively. You didn't actually read it. You just clicked yes, hoping that it provides a winner. So one thing I love to do, Derek, is on a trade like this, is go ahead and go back and re-annotate it. Talk about where you could have done it a little better, right? Talk about how that entry would have saved you risk, how that entry would have given you an advantage. And all you're doing is you're making your brain focus on the great things that could have been, even though it was still a fantastic trade. It was a beautiful trade. But now we get to refine and get more out of the trade. Derek, thank you for sharing that, man. That was an awesome picture. It was a great trade with direction, with momentum. Everything said down, and doggone it, that market went down. It's almost easy when you don't fight anything. All right, Daryl. Daryl, I love that you showed up to the class to show off a little bit. So let's talk about annotations again. Are you with me, Daryl? I'm going to take a picture of your picture. What do you suppose happened here? And I don't know about you guys, but sometimes I like to go back and just double check. What exactly does odds favorable momentum look like? Well, it means that my smalls are above the large. I like it. But it means that my large are wide. They're angled in the direction of the trend, right? So Daryl, sorry. If I look at your large triggers, do you see how they're flat and they're lifeless just a little bit? The small triggers are given momentum. The large triggers may be angling up. So I'm going to give you this one, but flat triggers lack momentum. You'll see it over here as well. But this is the one that really gets me. Price reached resistance, didn't it? And absolutely none of your trigger lines get through. The large trigger lines aren't even close to getting through. In fact, this look up top actually looks worse than this look at the bottom. Do you see it? Guys, can you hear me? Give me a yes in the room if you can hear me. Sound is cutting out. Man, I'm going to say it may be. All right, how's this? Are we better now? I'm trying to get back into it. Yes, cool. I don't know what it is. I think my headphones, maybe time for new ones. That's okay. I'm not going to scold you. But so Daryl, and this goes back to writing rules on the charts, right? If you write the rules on your chart, then you're going to say, man, I traded directly into a termination condition. And when I trade into termination conditions, this is a typical result. And what you're doing is you're building not only confidence in the condition, saving you from potential losers, but you're also creating recognition and you're associating your rules with the recognition. And that's what makes it easy, right? That's what gets that read second nature. And guys, I'm just going to say it. Yeah, I know you're making jokes. I'm going to say it. It takes a lot of courage to show a loser, right? It does. Guys, I didn't show my losers for the first 30, 60 days. John Novak told me to participate in his class, and I told him that I wasn't going to because it was scary. He made fun of me. But the difference is I lost $5,000 in 22 trades because I had no idea what I was doing. So guys, these pictures are amazing. These pictures are your path to getting rid of those mistakes so that you can become confident, so you can find that success that you're looking for. Rakesh, who is we? I know you're brand new. So Rakesh, can we take a trade here? Great question. Are you with me, Rakesh? Once again, we're 3 for 3. We're going to talk about rules. So Rakesh, what direction do you want to go? Up or down? You want to go up? All right, so let's start here. What direction is the trend on the large chart? The background is red, so we're in a downtrend. And you want to go up, right? So already we're kind of fighting the overall. And let's go into the next one. Rakesh, the smalls are below the large, not above the large, right? So I don't have momentum either. So let's go through this one. I don't have odds favorable momentum. Termination conditions aren't true. So Rakesh, price reached resistance and all the trigger lines remain below. So there's another no on this checklist, right? And then finally, do I have an area inside of favorable large triggers? And man, I think this is one of the best questions that you could have ever asked. Are my large and synthetic triggers, are they wide or are they angled in the direction of the trend? And the answer to that one is a resounding no. Because the large are down, right? Even the synthetics are down. So Rakesh, can we take a trend trade here? Or can we take a trade here? Absolutely you can. You can do whatever you want. But Rakesh, let's ask the question. Should we take a trend here? What do you think? Guys, this is what makes this class so effective, is you can go from should I, right? Is this the right trade, to focusing on the rules and looking at the chart, and you can really answer that question. So Rakesh, what do you think? Guys, anybody in the room, should we be looking for a trade right now in this particular instance? Do we have the advantages in place? Joel says no. Tony says no. And guys, if you're on day 2, you have absolutely no idea, right? If you're on day 2, you're like, I don't know. I think there was a trade there. So we go through it and we talk through it and we look at the rules and we can say, absolutely not. The advantages weren't in place. But I agree, Rakesh, 100%. But do you see how this little idea of talking yourself through those rules every time, if you have this checklist on your desk, you start talking yourself through it, and it's going to keep you out of these maybe trades, right? And even though the market went up a little bit from right here, it doesn't mean that it was a trade yet. So great question, and thank you for posting that. Keep posting. Every time you wonder, keep posting, but let's get in the habit of writing those rules on there. Take your checklist, write your rules, and what you're going to find is that you're going to begin to answer your own questions. You're going to start policing yourself, and you're going to start to understand whether or not a rule was there. Can we take a trade here? So same question, right? So Rakesh, this one's going to have a different answer. So Rakesh, this is a termination condition that's creating a full reversal. Do you remember when John Novak said trade with those triggers, those small triggers? This is a reversal that's providing odds favorable momentum. And this trade right here, Rakesh, this is what we call a momentum trade. This is a trade that when you understand the ideas of momentum, when you understand the ideas of a clear path, this absolutely becomes an opportunity. It's not a high probability trend trade, and if I tried to put my checklist on it, then my answer is no, right? So if you're brand new, the answer is hey, this isn't a high probability trend trade, but Rakesh, what you did is you identified a termination that creates a full reversal. You identified that amazing momentum, and you identified that price cleared the area and then bounced right back to it. This is what we call a momentum trade. This is a beautiful look that when you get comfortable with the looks, you'll probably incorporate this into your plan. This is the exact same look that my buddy Ron gets in right about here and gets out right about here and makes $100 on 5 contracts. And then he does it again when the trouble is cleared, and he gets out again for another 500, and he goes, oh my gosh, everything is clear and the momentum is in place. And I've never seen him this active, but it fits his rules all the way up. So, Rakesh, can we take a trade there? I am more on board with this one because every chart agrees the momentum is present. You just have to get the repetition in to understand how to take that best entry, that highest probability entry. This is an outstanding read. No, not a Pineski. The Pineski, Joel, is that pivot stop out. This is just momentum. This is letting those trigger lines lead the way. Let the direction, let the momentum, and taking a beautiful shot at it. Nice job, Rakesh. And everybody's going to see things differently. Remember that? John saw up and I saw down. Everybody's going to see things differently. And you're going to be able to take your chart reading and really decide what's best for you. 3 divergences in the same location is a potential termination condition. Termination creates a full reversal. Guys, let's talk about this picture right here. This trade right here is what we call a 50-50 trade. And I want to talk about what a 50-50 trade is because we haven't discussed it yet today. When we talk about termination conditions, and we talk about the potential for areas to break. We know that no trigger lines through the area means that we don't have a clear path, right? And we know that when the small and the large break through an area, that we do have a clear path. Well, this middle slide isn't one that I shared with you yet because I wanted to keep you focused on the absolute best of the best, guys. But your ability to take a high probability trend trade, your ability to recognize the advantages, your ability to get into that trade at the absolute best spot is going to teach you to read your charts. And your chart reading is going to open doors. The same way, Rakesh, that momentum trade is a fantastic trade when you're consistent on recognition. Your ability to read your charts is going to open the doors to a medium probability trade, guys. And a medium probability trade is defined as when most of your indicators line up for a trade. However, a small issue exists. And this will be the vast majority of your trades. And you're going to take these trades and you're going to manage them assertively. If there's trouble in your way, you may take a portion of that position off at the trouble spot and reduce risk to a zero loss level. Guys, your first medium probability trade is what we call a 50-50 trade, and it has nothing to do with the chances of success. It has everything to do with the look of your trigger lines in relation to the area that we're hoping breaks. Price reaches 69.80, absolutely no trigger lines go through. I'm going to sit on my hands and I'm going to wait and see what happens. Strong triggers break things, guys. When the smalls break through and the large don't, and I have odds favorable momentum, rule number 1 is in place, this area has the potential to break. It's not a clear path because it hasn't broken, because the small and large are not on the other side. So this area has the potential to break, but it hasn't broken. And what that means for me is that I don't have a clear path. It means that I'm forfeiting one of the 3 advantages, okay? So that's my issue that exists, is a clear path. So if I'm giving up the clear path, it's imperative to me. My money is worth not giving up momentum. It's worth not giving up that tight little entry area. So when we look at this trade, or when we look at this picture, the area has the potential to break. 69.80 has the potential to break, but it's not broken yet. Which means that when I'm looking at my entries, and I have pictures for this, and I want to share them with you. Whoops, where did it go? When I look for my entry on a 50-50 trade, guys, my money's worth the perfect entry. I've already forfeited the clear path. I'm not going to forfeit momentum, which means that no divergence on my small chart, right? Small's outside of the large. I'm not going to give up that small window of opportunity. I'm going to make sure that I have it's tight, it's consolidated, and my risk can be managed tightly because this area hasn't broken yet. Let me go back and find that 50-50 picture. Here, 69.43 had the potential to break with odds favorable momentum. It didn't. Here, 69.80 had the potential to break, and ultimately it does. Those great entries are going to help you take advantage of that 50-50 look. No divergence, strong triggers, small window of opportunity. Same thing. No divergence, strong triggers, small window of opportunity. That's your best of the best. So if I come through here on a 50-50 trade, smalls above, large below, right? 3 divergences in the same price range takes away an advantage. So even with the entry inside of favorable large triggers, I've given up not only the advantage of momentum, but I've also given up the advantage of a clear path. And guys, these are the trades that we take when we haven't had a trade in a while. So like when the NASDAQ is dead, you get tired of waiting and you take that first shot that you see, right? Trades with 1 divergence use a market flow signal, and you never got it. It's just a little patience piece there. Gary, it's a great chart read, but you gave away 2 of your 3 advantages, and it just didn't work out for you. And here you have the same look, right? 50-50 trade. Joel, there's your Pineski. Pivot stop out creates a pivot stop out at an area right inside of favorable large triggers, but that's still two divergences against a 50-50 trade. And this is not a market flow signal. This is just a reversal bar. So you still have in this picture, Gary, you have areas with the potential to break but haven't broken. And because they haven't broken yet, you should be insisting on that perfect entry. Two divergences takes away a lot of advantage. And the hard part is when you see it begin to go up from where you thought you were going to get in, you're like, well, maybe I should break my rules. And then you remind yourself that this is what happens when I break my rules. Did that make sense, Joel? A pivot stop out here very often will give you a pivot stop out here. So when the path is clear, it helps you make great decisions on entries. And we nicknamed it the Pineski because Paul showed us about 50 pictures of it one week while he was studying it, and it helped a lot of people in this room. And there's that 50-50, divergence printing, divergence printing. Now you're getting market flow signals. You just have to make sure that the rules are met, right? And then K. All I see is K. Is there a full name associated with that? Maybe not. All right, K. Let's see what you got. Uh-oh. It's trying to load. Did you steal your picture back? I'm going to try and click it again. Maybe it'll work this time. There it is. I like it. So let's take a look. Kay, are you with me? I like it. It's a good bottom, right? It's a termination that creates a full reversal that provides odds favorable momentum. Kay, I don't know if you're with me. All of this momentum off of the good bottom. You have an area that has the potential to break and it's almost broken. I like it. Two divergences. So you take the entry and you say, I'm going to keep my stop outside of the window of opportunity. I know that it's a medium probability trade because it hasn't broken yet. You got a market flow signal, a little bit of confirmation. It goes to the bottom of the window and then it goes to your second target. Beautiful trade. Two divergences. Guys, that's not a new user trade, is it? But eventually, you're going to get to the point to where you've seen this happen enough that you trust those good tops, those good bottoms, that your plan will grow the same way you grow, right? It'll evolve the same way that you evolve. There's that exact same trade from, was that Daryl? Daryl Rockstar, right? Much better entry this time. You caught it on the way down instead of the way up. Guys, you'd be amazed at how quickly you'll begin to embrace this if you post me 3 pictures of trades where the entries are late. You'll go, man, I'm giving up a lot and I'm risking a lot more. And look how it comes to the bottom of the window. And then it continues with all that momentum up to Fibonacci resistance. Beautiful trade once again. Consistency, guys. Over and over, the same look every time. The same advantages every time. The same idea that an entry in an area inside of favorable large triggers provides an advantage. That odds favorable momentum provides an advantage. That we can use Fibonacci to understand where the market is likely to go, where it's likely to stop, where it's likely to continue. And we can recognize the advantage of a termination condition that creates a full reversal that provides that momentum. Guys, that is 3 different people showing the exact same trade with the exact same results. Anybody can do it. Everybody can do it. You just have to study it until you're comfortable. Ron, if this is a trend trade, I'm booting you from the room. All right. And then Rakesh, pay attention to this one. This is the one that I told you. You'll begin to recognize that odds favorable. You'll begin to recognize that clear path. And not everybody waits for the same entry, but there's one of those pullbacks directly to a mid-band or directly to one-to-ones, and it continues up to the trouble area, and then it clears. He gets back in, and it continues up to the trouble area. It's fast, isn't it, Ron? Man, it's good for what you do, though. For your style of trading, Ron, the NASDAQ is amazing because when those small triggers are screaming, they win. Nice trading. If you're a little distracted, just embrace it, right? Embrace the idea that you're distracted and go walk on the beach. All right, Paul, let's see what you did, my friend. Paul says, oop, that wasn't Paul, was it? Nope, clicked on the wrong one. This one's Paul. Missed the termination by 06. Thoughts? Let me look at it. Let me see where we're at. 52.50. You're in at 52.50. All right, Paul, what do I think about it? Missed it by a tick, guys. Missed it by a half of a tick. A half of a tick. Let's look at the advantages. What I think about it, Paul, is me personally, that's not my trade. Just based on that half tick. Based on this momentum, right? That half a tick, these strong triggers, that tiny little window of opportunity, that perfect entry, and that awesome management, I think you crushed it. I think you absolutely killed it. I think that you were super close. Guys, one thing that we talk about sometimes, and I love this. Whoop, I'm going the wrong direction. And not everybody identifies with this analogy because some people have never been in a bar fight, which is good, and I embrace that if you've never been in a bar fight. But let's talk about it. Loss of momentum at the top. The trend is down. The large are wide and straight down, and holy smokes. And the small are outside of the large, and we were 0.6 of a tick off. All of these advantages that say the market is likely to go down, right? Tiny little window of opportunity, odds favorable triggers, strong trigger lines, everything says down. Everything, guys. This is the rugby team, and they are hammered drunk coming off of a win. And this is the captain of the chess club that says, you know what, guys? Duke's up. Let's do this. Who do you suppose is going to win? 13 drunken rugby guys or the math genius? You can make a case for the short, right? You can make a case because of all the advantages in place that this market's at least going to push a little bit, that you can manage it assertively, that you can get in, that you can reduce your risk, that you can take profits quickly at the area where it had the potential to stop. Paul, I think you took this trade as well as anybody could ever take it. And I think that you had so many more advantages. And look at this, even odds favorable momentum on a range chart. I think it's a great trade. I don't think everybody's going to take it, and that's okay, right? Grandpa always said if we were all into the same thing, everybody'd be chasing grandma. So it's important that you understand this is Paul's trade. I missed one from yesterday. Sophia, was that the one that you posted at 4 in the afternoon? I didn't miss it. I wasn't at my computer. But here it is again. Termination creates a full reversal. Full reversal creates odds favorable momentum. Odds favorable momentum. Sophia, you take that momentum style trade and you manage it directly into the mid band and you take profits. And Sophia, that's a beautiful trade. Did you catch the pivot stop out at resistance on the pullback to the large triggers? Because I caught this one up here And I think I made a couple $100, and then it pulled back, and then I caught it again, and my final exit was somewhere down here at Fibonacci support. So you were out at divergence. I love it. But didn't you have odds favorable on the pullback? And that was a good one. And let me see. I saw that one, and I thought, man, Safia, that's a great trade. Let me see if I can find, John and I were talking, and we always do. We talk throughout the day. We talk in the afternoons. Let me see if I can find where I took mine. And I took it a couple times. Got in at the top. Took some profits. When it pulled back, I got in again as it came through. Got in again. And this one hit the target. And this is all that same thing, right? So kind of coming through. As you grow with the software, you'll get in, you'll manage, right? You'll get in. You may take small losses. But ultimately, your chart reading is going to get you where you need to be. And that market off the termination condition just screamed to the bottom. That made my day. I had a great day. NASDAQ was difficult to trade right up until that trade. I was up and down all day long. I was up 200, I was down 50, I was up 150, I was down 80. And I just stuck with my plan, and eventually I think I finished the day up $800 or $900. Termination to termination. See, Ziva, you took some really risky trades. You took some really risky management decisions yesterday too, right? But you don't need to. And that's what slow markets, guys. And this is why I always tell you, and why rules met should be the only reason that you get into a trade. And it's hard. I can't wait to see your photos. But if you kind of embrace that idea and you tell yourself, rules met. Guys, I have a piece of paper in front of me on the desk, and I write it out about every third day. About every third day, I write it out. And at the top of it, it says the plan, and it says with the trend always. And I write it in all capital letters. And it says with odds favorable momentum always. And I write it in capital letters. And this is the first thing that I look at. And just below that, with a big star next to it, it says on the NASDAQ, never fight the small triggers. Because that's one of my personal rules. And to stay focused on my rules, I have that written down in front of me, and I can't not see it as I prepare for a trade. And then I've got written below that, never into terms. And then in even bigger capital letters, I write out, they won't break. And they might sometimes, but I'm telling myself they won't. They won't ever break. I'm not trading into termination conditions. And then below it, yesterday, because I took a couple trades, I wrote, seriously, don't try to anticipate getting to the right side of the small triggers. Don't ever fight them. So what does it mean to fight the small triggers? Give me 1 second. Let's talk about David's real quick, and then we'll look at it. David, I like this. Higher divergence is a great look. Odds favorable is a great look. The midband is not acting as a termination condition. You take the perfect pullback to support right inside of favorable large triggers. You get paid there. Up. And Ninja Trader crashed, but yeah, that's great second target. Nice trade, David B. All right, Ziba, what do I mean when I say don't fight the small triggers? Let's go find out. This is NASDAQ right now. Let's say, hypothetically, let me see if I can find an instance. The market's coming up, and let's say that you're looking for a short somewhere right here. Do you see the small triggers? When I say don't fight the small triggers on the smaller chart is what I'm talking about. When price is outside of those small triggers and they're up strong, I'm not going short. I'm waiting. And if I wait for the close on the correct side, it typically saves my bacon a lot. If I thought that I had a short trade right here, Look at those small triggers. Guys, I don't fight them. Part of my plan is I don't fight those small triggers. I don't ever hope that they break. If they're right there and they're strong and they're against. And let me see, because I take a lot of pictures, but I don't always catalog them the way I want to. It's not advice, Ziba. I don't give trading advice, ever. I only give observations. That wasn't it. I mean the small, on the 13-2. On the 13-2. I'm looking for, because I drew it out one day, and I was like, John, check this out. I'm starting to study it. There we go. And I think that's the one that I sent. Nope, that wasn't it. The NASDAQ's been a little wonky, right? But here we go. This might have been an opportunity for a long, right? And I think this is... Let me see if I can make this bigger. So check this out, NASDAQ traders. You're thinking longs, right? That same gap theory, Sophia, Ziba, that same gap theory, if I have a full bar back to those small triggers, I'll take it at the area, and this is my management point. And then when those small triggers never roll, look at how price bounces off of it. Bounces off of the smalls, bounces off of the smalls, bounces off of the smalls, bounces off of the smalls. And then when it gets to the other side, it pushes right to that area of resistance. And then it heads down. Gap theory. And this is just my observations. It's not rules. But one of the things that you do, guys, is the more that you trade, the more you recognize patterns. And the more that you recognize patterns, the easier it becomes to take advantage of them, right? So never fighting the smalls on NASDAQ is not a Nexgen rule. That's a Mark Novak rule. That's a Mark Novak for Mark Novak's trading rule. But I want to share it with you because it keeps me out of a lot of trouble. And then let me show you a potential blunder. I'm trying to find mine from yesterday. There was a trade that I took yesterday. Maybe it was this one. Nope, that wasn't it. But there was a trade that I took yesterday where I fought those small triggers. And I shouldn't have. And there it is right there. Nope, that was a long going with the triggers. That's it right there. That was my spot for the short. And I fought the smalls and I got run over. And then I waited for the close on the correct side. And I took it all the way down. It's not a high probability trend trade. But waiting for those small triggers, keeping price on the correct side, keeps me where I need to be. And that's just me on the small chart on the NASDAQ. Guys, termination from a termination. Triggers don't agree. Look at the indecision on your smaller, faster chart. Look at that NASDAQ chart. Synthetics are up here, larger down there. Divergence is here, divergence is there. There is no clear path. There is nothing to do. And then there's one of those 50-50s. Some of you went long and got paid, right? Coming from a termination that creates a full reversal. There's a moment. There's one of those pivot stop outs, right? 50-50 trade, divergence prints, and sure enough, it cranks through. 3 divergences in the same location lets you know to not try it again. Let's see where we're at. Tony, the Tiger, you're great. That's a good top, right? And then the momentum is killer. And there's that Ron style, right? Boom, boom. Recognize odds favorable. Recognize a clear path. Make a little money. Don't be greedy. Does this stop you on the small charts? What do your rules say, Tony? Will a 5-1 fib stop me? Maybe for your style, that's a good target, right? But over here, we've got that termination that's rolling the market. The momentum's getting up. I know, right? So a 5-1 fib doesn't pull me out of the market. But my 5-1 fibs are typically over here on my 13.2. And that becomes a great spot to take profits. Paul, is this that same trade? Nope. Everything says up, 50-50, strong. You take the entry, first target, the first divergence gets you at the best spot or you're not going. I love it. Loss of momentum, Paul goes from the bottom. Quick profits at the trouble spot, looking to go up. Nice job. And you said you're at break even, which meant that you got your first profits. Beautiful job, Paul. Strong trading today. There's that 50-50 from the termination. One divergence straight back to the mid-band. There's an antenna bar if you were waiting for a signal to take that trade. Gary, great read. Bradford. Let me see where your entry is here. It's hard to line it up. 1023. There we go. Huh. Maybe a little aggressive. You know? Maybe a little aggressive with the large down, the small still below, the smalls having broke through. Maybe just a skosh aggressive, fighting all of those triggers. Do you see it, Bradford? It worked out great. It really did, but you had a few ticks to get back to that resistance with all the triggers, especially after a termination condition, right? That one's just a little aggressive. Ultimately, it looks like it gave you a potential shot to go for more, but getting that first look, getting that first read off of a 50-50 that doesn't work, I dig it. It's a great chart read. That's not a new user trade though, guys. Gary, you say you screwed up. Into that fib. Triggers below. Divergence prints. Even if you'd gotten in at the absolute best spot, it may have been an opportunity for management, but termination condition for sure. And then Debbie, everything says up, everything says go. One divergence, you take the entry, and this is on the micro ES. Debbie, are you watching the large ES for your, is this MES or is this ES? Yeah, it didn't get a lot of room to breathe there. But that's okay. Divergence on a 50-50, it's going to push lower typically. So Debbie, what I used to do when I would trade the micro ES, and you don't have to do this at all, but this is what my workspace looked like. And I think I even have a micro chart here because I was playing around with some stuff. Is I would use the micro chart for entry, right? But because the micro ES is not the ES, they're two completely different markets, I'm using the big ES, the large ES for momentum, for direction. And look on the micro, I think this was your trade, wasn't it? My synthetics, that was the perfect entry. That was your trade. Based on this look, using the large triggers. So I know that your charts are a little adjusted. That might have actually kept you in that trade, making money all the way up. But this is what I did. When I trade the micro ES, I would let the larger ES lead the way because that's really... Oh no, is she okay? Good. That's what's important. And this one is beautiful, isn't it? Entry, profits, and then get out of that one. Debbie, you're so solid. You're so consistent with what you're doing. Just keep doing. And then Paul, trailing stop as you get to extremes. Don't want to give much back for a bingo. Consistency is coming now, Mark. I officially believe you will quit your dog. Oh, I got goosebumps. I know it's silly, but I'm going to take a picture of this right here. And when you quit your job, I'm going to remind you when you said that. Consistency will get you there, right? Consistency will get you right to where you want to be. We're going to call this one's Paul's quitting. He's calling his shot. Man, Paul, I can't tell you how happy that makes me. I don't have any doubts. I don't have any doubts about any of you guys. We all get there at our own time, guys. We all get there at our own pace. Some people jump in and 3 weeks later they're profitable and they're amazing, and some people it's 3 months. And everybody's different, but the path doesn't change. Posting pictures, right? Gary, 50-50, multiple divergences, and you said, you know what? Not this time. Not taking multiple divergences on a 50-50. Not this time. Great job. Making mistakes is normal, guys. Learning from them is key. Safia. Everything says up, right? We're into that termination condition. Your smalls are weakening a little bit. You get a little weakness here. So you say, you know what? It's a termination. Everything's up. It feels good. It looks good. Strong triggers, one divergence. Why don't I take the perfect entry and get paid at the trouble spot? Man, that's beautiful. Safi, and what you're realizing is that your ability to read your charts is allowing you to manage these trades aggressively, right? Remember a month ago when it had to be a home run or you were pissed off? And this is all part of the progression, guys. But it starts with coming to terms with what the advantages are, right? Watched a lot of Mark Douglas and had to weather Mark Novak. I'm so sorry you got to put up with me. I'll give you the same apology I give my wife every day. I'm so sorry you're stuck with me. Ziba, it looks like the same trade, right? So losing momentum. Everything says up, not the best of the best, and you recognize that. So if we're sacrificing momentum, Ziba, I like this trade, I really do. And I think that you missed your management opportunity. Let me know what you think. Everything says up and your path is clear, right? I like it. That's a good look. Let's take a picture of it so we can talk through it. Because, guys, I always want to talk about the positives. I don't only want to focus on the fact that it's a losing trade. Because sometimes losing trades aren't negative at all. So let's see what we have. We have everything says up, but you're losing momentum, right? It's still outside, but it's already returned, and that's okay. It's a great look, Ziba. What chart is this? '21 range. Do you know how to use it? I'm just asking. Nope. So Ziba, stop distracting yourself. Not trading advice. Why on earth are you dividing your attention to something that you don't know how to use? So do this, Ziba. Keep it on 2 charts. Keep it simple. And then after you take the trade that fits your rules, go see what this chart said. Right? Keep it minimized. So let's focus on this. We're losing momentum, but it says up. The path is clear. I love it. Your entry is a couple ticks above. I love it, right? So Ziba, let's talk about some things that we can do. Your entry is at 94.50. The market went 6 points, $120 worth of profit, right? It went 6 points right up to that divergence high. No reason to not make a little money, right? You don't have to hold for a home run when the momentum isn't perfect. When the momentum looks like this, hold that bad boy. But when it's waning, it might push lower. And there's your push lower, right? So imagine you get in, you go this loss of momentum with this loss of momentum, this could be a trouble spot for me. I'm going to get paid there. I'm going to make sure that I get some money in the bank. And Ziba, I think that where you missed the ball here, you got a reversal bar from inside of the window of opportunity. You probably shouldn't have had more than 3 points of risk on this trade once it started going, right? But instead, kind of like yesterday, you hoped a lot. I hope it goes. I'm losing momentum, but I hope it goes. I've got a trend change, but I hope it goes. I've got 2 divergences at a pivot stop out, but I hope it goes. So the next step is to take this great entry, this beautiful entry, right? And that's exactly what I'm going, is that progression. So Ziba, we talked about having a plan for management, right? And that's got to be managing your money, managing your equity, managing your trade. This reversal bar is your management opportunity. And you're at 91.50, so you have 3 points of risk rather than giving up 18 points of profit. Does that make sense? Go back on your last 10 trades, Ziba, that you took full losers on, and see if there was a reversal bar opportunity. If you miss the second divergence, and please, I'm sorry if this comes out wrong, if you miss the second divergence, you're not paying attention to your trades. But even if you did miss it, your stop placement wasn't in the right place. Your stop placement could have been below that pivot right there, 91.50, couple ticks. So whether you notice this or not, you've got to be willing to move those stops. You've got to be willing to preserve risk. Because one of the things, 6 signs that you know you're maturing as a trader, and this is number 1. First, you manage risk, right? First, you'll put yourself in the kill zone, but you've got to manage your risk, and then you manage your reward. So if you forget to manage your risk and all you're doing is hoping for reward, you start giving a lot of that reward back, right? And without momentum on the large chart, let these slowdowns be profit spots. Get to break even. Yeah, you're doing great. You're learning management. Your entries are consistent. You're learning management right now. And everybody in this room will tell you that management isn't second nature, because it's difficult to get out of a trade because you start saying things like, but what if it goes? What if it continues going? What if that keeps going in the direction despite the warning signs? And you start holding on too long. Ziba, you're doing awesome. And Derek asks, would this be a momentum trade? Let's find out, Derek. You're welcome, Ziba. Every day, I promise, until you get to where you want to be, I promise. Sure. And Bobby, let's talk about it, right? First, you manage risk. What does that mean? That means having a plan for stops, right? Having a plan for stop movement. Having a plan to get in at the best spot so the risk is the smallest. You're managing your risk. And then when you begin to manage your risk, then you can manage the reward. I love this one because this is so true, because this means that you're pragmatic and not hoping. The second one says, let's zoom this up, guys. You are completely relaxed when making trades. Who can say in this room that they're completely relaxed when they take a trade? I can. Guys, I'm very calm when I take trades because my trades fit a plan. My plan gives me an advantage. And it took me a long time to get here. It really did. Tony, do you know when I'm not relaxed? Is when I break my rules. And guys, I break my rules. 99% of the time, I'm totally relaxed. And I don't care if I lose. Well, I care if I lose, but I know that I have a better chance of winning. So when you find yourself, when those palms stop getting sweaty, it means that you trust your plan. When you don't move your stops arbitrarily because you don't want to lose, it means that you trust your plan. So the more relaxed you are, Ron, the more relaxed you are, the more you believe in the advantages that are present, right? The more you believe, what's going on? You're relaxed when I'm making trades. I love it. This is a big one. You don't force or chase trades. What does that mean? If you're chasing trades, if you're forcing trades, it means that you're not following your rules, right? We all do it sometimes. We form opinions, or we miss the best entry, so we get in 7 points late when we can't manage risk. And don't let trading be your daily adrenaline fix. Guys, go jump out of an airplane or swim with sharks or hang out with Ron C if you need an adrenaline fix. Don't let trading be it. Trading's a business. Trading's a job. Trading is an opportunity for you to make more money than you could ever spend. Give it that respect. Don't let it be that adrenaline fix or what you're doing for fun. Follow your plan, guys. Your plan has to be solid. Your plan has to be written out. Ziba, your plan has to involve management the same way it involves entries. You have to write it out. You have to focus on it. And you have to commit to it. And you have to believe in it. If you don't believe in your plan, it's hard to commit to it. And this is for everybody in the room, especially you new people, especially you guys that love to beat yourself up. Is your worth as a human has nothing to do with your worth as a trader. And so often we want to down talk ourselves, right? Oh, I suck. I'm no good. I stink. This, oh my gosh, I'm the worst. But you're not. You're just learning. You're an amazing person. Guys, some days I'm the worst trader ever, but I'm still going to go out and try to feed the homeless and love a puppy and high five my wife, right? Still a great person. I just sucked at trading that day. That's okay. It happens. And that's it. Bobby, you're at the point when you make a mistake, you know what you did. You just need to see it before the trade. So, Bobby, let me ask you the question. If you make a mistake and you recognize it, do you exit the trade or do you hope? Because I know where I'm at now and I know where I was. And I used to hold on to that trade. Well, I'm already in it. I might as well see if it works. And I exit, and I accidentally took a trade in the S&P yesterday, and I did it, and I was like, whoa, hold on. And I closed, and it was a $50 hickey. But it was a $50 hickey on a 4 lot, right? It wasn't a $1,200 hickey. So, guys, that's your little thing. Signs that you're maturing as a trader. You know, we all mature at different levels. And then this was Derek asking, is that a momentum style trade? Derek, are you with me? You are getting better every day. I see it. So, Derek, your large chart, describe the triggers for me. Let's use that key word. How about odds favorable momentum? Do you see it? Ziba, maybe. Process. Process yields results. The desire for results does not yield results. So Derek, you've got odds favorable momentum. Scream into the upside off a termination condition. The market breaks the one-to-ones and pulls right back to the one-to-ones. Technically, it's both, which is kind of cool, Derek. It's a pullback to support right inside of favorable large triggers, right? And you're using the momentum, but it's a textbook trend trade. And it also looks exactly like a momentum trade. The momentum trades, Derek, you're going to see those when those one-to-ones may not fall inside of those large triggers. And let's see if we can find an example of it for you. I'll go to NASDAQ just because it's got a million more options. You'll see those momentum trades on the NASDAQ, and they will look like, let's see if we can find it, where the conditions may be right. And of course, it's not going to give me any clear ones right now. Not a one. Holy smokes. And it's usually going to happen right off of a termination condition, right with that great momentum. That's close, but not quite. Sorry, Derek, I can't find an example, but it looks exactly like that. Is it stuck? Guys, it's never stuck. You want to see what the NASDAQ's done today? This is what the NASDAQ has done today, guys. It's not stuck. So let's change the verbiage, Safia. What is the NASDAQ not doing today? It's not giving you a rules-based entry, which means that you don't have a statistical advantage, which means that you're not taking a lot of trades. And guys, not being in a trade is just as advantageous as being in the wrong trade. It's better than being in the wrong trade. But it's moving. Yesterday, there was a boatload of money to make on the NASDAQ. Today, it's struggling to get through these areas, right? There's a fight going on. So we're just kind of waiting. And waiting's okay, guys. We're professional waiters. And I made it through all the pictures. That's pretty cool. Nice job. Gold was good today. And guys, some of you will watch separate markets, right? Some of you will watch the S&P, and some of you will watch the S&P and gold, or maybe gold and crude. Some of you are going to try and watch everything. I found, and this is just me, as my trading gets better and better, the fewer markets I watch. When I focus on the best instead of feeling like I'm not looking for everything. Because what happens is if I miss a trade on the S&P, I try to make up for it someplace else. And that's just the way my brain works. So if I just focus on one and I say, hey, this is what it is, that's cool. And I'm good. And guys, I want to show you something too. Somebody sent me a message earlier. And that's it. When I watch too many, I tend to miss everything. So I'm going to do this, guys. I'm going to cover my charts real quick. And I'll just cover them. I'll cover them with a picture of the rules. Can't see anything, right? So this is Mark. And when this picture goes away, this is me looking at my charts. And this is what my brain does. And I'm going to talk you through it. And what it is I know my checklist. So I start talking through my checklist. I open my charts and I say, what direction is my large chart going? And it's going down. And I say, well, my large chart's going down. Do I have odds favorable momentum? And I say, I do. And then I say, well, do I have a clear path? And I have to say, no, I don't. I don't have a clear path. And I stop. And then I come back to it in a minute or two, right? And I open it up. What direction is the market going? It's going down. What does my momentum look like? It looks like odds favorable momentum. Do I have a clear path? I don't, but I'm getting close to one of those 50-50s. So if my small triggers break through the area, if I don't have divergence on my small chart, if I get a pullback to an area of resistance inside of favorable large triggers, well, then I'm willing to take a shot at the short, but I still don't have a 50-50. My smalls haven't made it yet. But I talk through my checklist every time I look at a chart. See, what does though mean, Ziba? Good top though, so maybe I'll break a rule. Good top though. I don't have a clear path, but I had a good top. That word though, it's as dangerous as but. It is a good top, and that's great recognition. So Ziba says, I'm going to see where I'm coming from. It's okay, Ziba. I'm coming from a good top. That good top created a full reversal. That full reversal created odds favorable. But dang it all to heck, there's one of those stupid blue fibs with no trigger lines through it, and it kept me out of getting in at the one-to-ones. It kept me from fighting the small triggers. NASDAQ traders, look at how it bounced off the small triggers. Let's see what happened if it gets to the correct side. Now it gets to the correct side. And now it starts to push down, and now it's below the small triggers. And now if you were going to take a potential trade, you could have at least been on the right side of that momentum indicator, and it gets you right back to the trouble spot. Isn't that amazing? So NASDAQ traders, don't fight it, don't fight it, don't fight it, don't fight it, embrace it and go. And if it's the perfect trade, that's your entry. You see the one-to-one line, like a term? Where? Right here? Or right here? Large chart? Ziba, is it a target or is it a termination condition? Has price reached the one-to-one? That would be a target, wouldn't it? No, not until price reaches it. It can't be a term. It's just yellow dots off in the distance. That's all it is. It's not a termination condition until price reaches it. Rakesh, I want my rules to be met, right? So I want odds favorable momentum. I want a clear path. And I want an area inside of favorable large triggers over here. So right now I've got two divergences. I've got a 50-50. These areas haven't broken yet, but they have the potential to break. There's a third higher divergence. Rakesh, there's 1,000 reasons to never look for the short. Divergence, 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 right? Even though this says down, this fib area hasn't broken yet. This fib area hasn't broken yet. That's two areas that don't offer me a clear path. It does, Ziba, as soon as price reaches it. As soon as price reaches it, it has the potential to be a termination condition. And here we go. Term or target? I made this picture for that very question. Price reaches support, no triggers break, this is a termination condition. Anything off in the distance that price has, why? To not take any trades with a target? Until price reaches that area, it's a target. Everything has the potential for a term. So Ziba, you ready? Every line on that chart has the potential to be a termination condition. Every line has the potential. So if you're not going to trade because you see a line, you should just shut it down. You're never going to trade, right? But if you change your thinking and you say, if that line is off in the distance and price hasn't reached it and my rules are met, well, then this becomes the opportunity for a target. I can see where the market is likely to go, and that'll be a great spot to take profits. Okay, but it never made it, right? It wasn't these one-to-ones that foiled the party, Zeba. It was the fact that this area didn't break, the fact that this area didn't break, the fact that the small chart gave multiple divergences in the same price range, right? Had nothing to do with these one-to-ones, not at all. These one-to-ones are just off in the distance. The same way these one-to-ones remained off in the distance, but that resistance that was hit stopped it cold in its tracks. Does that make sense? Because if these lines weren't here and it was odds favorable and everything said down, I would hate for you to miss a 300 to 500 point winner because a target was there rather than a termination. So yeah, good stuff. Nope, we can't discuss it. Sorry. Just kidding, Safia. Where are your rules? What kind of trade is it? Zeba, and they're going to keep... Remember when you thought you had it all figured out a month ago? And you're still learning, right? You're still getting better. All right, Safia, I'm going to write rules on here. It's either 5 or 10. I'd have to look. So we're going to type on this chart. Guys, this is a good top, right? This is a termination that creates a full reversal. Is everybody comfortable with that idea? When a termination condition is reached and it creates a full reversal of the market, we're going to call it a good top. We're going to call it a strong top. So my next thing is, do I have odds favorable momentum? Do I have odds favorable momentum? Absolutely, right? So Safia, so far we're on a good path. Do I have termination conditions? Well, I don't, but let's talk about what we do have going on. I have a 50-50 trade, right? Which means potential to break, but not clear. And then let's go even bigger. It's on 2 areas, not just 1. So I'm looking at termination creates a full reversal. It provides, and I have a 50-50, but it's not just this lower area, it's also this upper area. And that becomes problematic, right? Because now I'm hoping that that momentum is able to break 2 areas. Guys, can you hear me? Give me a Y if you can hear me. I'm going to go buy a new headset today. Hold on. Change ports now. So some of Discord. But it's weird that Discord would be abusing some of you. Still cutting out. There's an echo. All right, hold on, guys. I'm going to log out and log back in, and let's see if maybe resetting it helps out, okay? Hold on just one sec. I'll be right back, I promise. All right, can you guys hear me? And it looks like Discord was trying to pick up my new my headset, And it was trying to identify it, and I think that was one of the challenges, because when I went over to my other Discord side, not my pop-up, it had a message for me. All right, so everybody's good? Man, my video's going nuts. It looks like it's blinking. Is the video blinking on your end, guys? No? Okay. I'm going to put it back up real quick. It was looking absolutely crazy on my end. Here we go. All right, so we're back up. And then Safia, let's get back into it, right? Guys, let's all do it together. So we have the 50-50. Two areas aren't broken. Johnny Rocket. I know somebody that had fun in the 60s. So I'm trying to get these two areas to break with that odds favorable momentum from a termination condition. But what do we notice, guys? There's one divergence, right? And there's a second divergence in that same price range. Then you didn't. So not only do I have two divergences here. Safia, are you with me? Two losses of momentum on two areas that aren't broken. Let's build a window of opportunity just for grins. Are you ready? From the highest point of resistance to the lowest point of resistance. Safia, we're looking at approximately 10 points for your window. Do you see it? Because those triggers are split. So it's a 50-50. You've had multiple divergences. Your window is huge. So there's a lot of challenges going on with this trade. Two divergences, and this is where I like how Paul trades a lot. And I'm not saying, if there's two losses of momentum, he's looking for that furthest away, right? Because we get in early because of the momentum, and when we see it waning on the smaller charts, he loves that higher entry. This one gives you the opportunity to manage it with a little smaller risk. But I think what you had here is you had the, damn it, I'm bored. And I know that there's two areas that haven't broken, right? And I know that the momentum on the small chart is dying out. And I know, and I actually had two losses of momentum there. And my triggers are split. Do you see how the advantages just kind of start going away on that? And then those 50-50s don't work, and the smalls come through, and the large are rolling, and there is, I have a feeling that's John Novak's picture right there. I will. Is that what John is showing us? When these 50-50s don't work, when those multiple divergences come through, right, and all the trigger lines roll, and this is what John was talking about, paying attention to those small trigger lines. When they're vertical and everything says up and every chart agrees, guys, this is a great opportunity. Beautiful trade. When the 50-50s don't work, sometimes it means that these areas are holding. It means that things are rolling. It means that those triggers are heading in the right direction and everything agrees. And guys, you're going to work your way into that trade. And it's going to become a great trade for you. But you got to get the basics first, right? You got to get the basics first. There you go, Safia. So that you can catch these effortlessly. And then there's that momentum style trade. Beautiful. Derek, do you see it? Everything breaks the areas, pulls back to the area, giddy up. Safia, nice trade. The advantage of momentum, the path is clear, breaks, pulls back, boom. Ron, right now, is lighting a candle for you. Did you? Yeah, you probably did. It's a great look, guys. but it's dependent on momentum. And this is what NASDAQ does, right? It gives you those little... John, you got 19 points on the runner and got out too soon. It's still going. Look how it hit the brakes on that fib. That was my hitting the brakes sound. And it pushes all the way back to support with absolutely no triggers through. And then there it goes again. Paul. Everything says up. Perfect entry, quick profits, money, money, money. Mid-band holds, but not your trade. Beautiful, Paul. What a great trade. Was watching this as the bigger target on the bigger charts. You don't need those bigger charts, John Novak. Chickened out. Guys, your plan is going to change, right? Your plan is going to change as you change. Your plan is going to grow as you grow. Your entries, your exits, everything that you do is going to become second nature. So let second nature be simple at first. Let second nature be the best of the best. Let your focus be the advantages initially that get you to those next trades, that get you to those momentum trades. Only 2 charts. That's it. So if you wait for the advantages at work, yes, it's okay. Did you need any more than 2 charts to do what you just showed me, Safia? Odds favorable, clear path, pull back to the area, go, right? That's it. So I'm going to show you guys, that's the NASDAQ right there. John says, this pattern, learn it, no matter what charts you use. Second lower divergence, second higher divergence. Pay attention, guys. That's a pattern. So this is a pattern. Watch this. I'm going to copy that link that John Novak just gave me, and I'm going to open up my spreadsheet, and I'm going to go to chart reading things. And I'm going to put this link in here, right? And I'm going to drop in his web address, and I'm going to call it second higher lower. Nope, not a strong bottom, Paul. A termination that creates a full reversal is a good bottom. That's it. Don't try and make it more than it is. The pattern that John is showing you is that when the market loses momentum and then price can't get back up there and it loses momentum a second time, it creates a great look. And a lot of times there's bigger moves after it. Is it a guarantee? Of course not. But it gets you thinking, hey, my large chart says, here we go. And then when this gives those strong triggers and that clear path, this is when, Paul, your brain goes, because of this second lower divergence, I'm holding to that next area because I know that this pattern gives me the great look, gives me that advantage. Does that make sense? John's been throwing this in the classroom here and there for the last couple weeks. And he's been studying a lot. The same way I study those triggers on the NASDAQ is the exact same way that he studies these patterns as well. And that's what we do. So guys, here's how we're going to finish up today. I want to share a story. I like sharing stories. There was a time in my life where I road raced motorcycles. I was one of those guys, full leathers, 150 miles an hour, having a good time, right? And there was an instructor that talked about what it's like learning to road race. And it's very much the same as learning to day trade, to be honest with you. And he said, go into every situation. And let me know if this makes sense to you guys. Go into every situation with $10 of attention, right? That's all you have to spend on your analysis is $10. And in the beginning, You're going to spend $3 recognizing odds favorable momentum, and you're going to spend $4 recognizing termination conditions, and you're going to have that little 3 remaining over here for entries, but that's probably not going to be enough. So you're going to study, and let's put the numbers on it. Whoops, call out. So I'm going to spend 4 here, and I'm going to spend 3 here. And guys, I'm not going to have enough. 3 isn't enough over here. But by the end of the 3rd day, you're going to spend $1 on recognizing odds favorable. It's become second nature to you, right? And that idea of termination conditions is going to get easier. And that we're going to drop that to 3. And now you're only spending $4 on the large chart, which means that you're going to focus the rest of your attention on finding that entry. You're going to spend $6 worth of attention finding that entry. And this is your path. This one becomes easy, so your secondary focus is still difficult, but it's not second nature. But eventually, through pictures and questions, you're going to recognize termination conditions in a fraction of the time. And your large chart will literally take you 2 to 3 seconds to understand whether or not you have a potential entry. And after 100 pictures in the classroom, after all these great conversations, you're going to spend $3 on your entries, right? And you've got $5 invested into finding the perfect entry. And now finally, you're going to focus that money on management. You're going to focus that on spending your money on learning how to manage your trades. And guys, this is the progression. Get so good at odds favorable momentum that it's instant. And get so good at termination conditions that it's instant. And study those entries, guys. Study those entries over and over until finding your best spot for entry becomes effortless. And you're managing your risk through having these statistical advantages. And then you can begin to give everything you've got to getting the absolute most out of every trade. And understanding that that pattern of a second higher lower divergence gives you an opportunity for more money. Understanding that odds favorable momentum gives you an opportunity for more money. Understanding that strong tops and bottoms give you an opportunity to maybe take a chance on a potential entry. And you're going to do this over and over. And guys, there goes the NASDAQ, right? And they're just running. And you may not have a rules-based entry. All right, Ziba, let's see what we did. Don't know how to use it. Don't know why you have it. Everything says up. The path is clear. You get in above the areas, not inside. No, you're okay. Don't delete it. Just minimize it because you're going to learn to use it. Rod, have a great one, man. Eat a chili dog for me. Ziba, do you notice how you're getting in early on these? And it's hard to see because you've got things so scrunched together. But you are 4 or 5 points above a mid-band. You are well above those areas inside of favorable large triggers, right? You could. All you have to do to get a better photo is just stretch it out a little bit, right? Not having this chart up there will make it easier. Grab your horizontal down here and just stretch it out a little bit. Then give me 2 photos. Yeah. And that way, when you go back and study, Now you have two separate trades, two photos, right? You're okay. I can do it with this one. Rakesh, give me 1 second. So, Ziba, everything you're doing is solid. Direction, momentum, everything's going. You're just jumping in early, right? You're just getting in early and you're increasing your risk and you're decreasing your profitability. So when it starts coming back, wait for the areas. There is no best part to jump in. Your rules say an area inside of favorable large triggers, right? Am I mistaken on that one? Area inside of favorable large triggers? Is that your rule, Ziba? Then why are you asking me how to break your rules? Wait for the area inside of favorable large triggers. That's it. Either the rules are met or they're not. You're asking me, Mark, how do I break my rules so I can get into more trades? Well, I don't know, Ziba. I don't have a plan for that. But if divergence prints, you don't have momentum. So that should have negated both of those longs for a momentum style, right? The small triggers aren't outside of the large, so you didn't have momentum. So rather than being concerned about how to jump into a trade with momentum, why don't we get on speed with making sure that momentum is there? Smalls have to be outside of the large in order for there to be momentum, right? That's momentum. But if you don't have this on the large chart, why are you looking for entries on the small chart? Do you see where I'm going with this? You're asking me, Mark, how do I bypass the most important part of a momentum trade to get in on the small chart? If I don't have momentum here, I can't look for momentum here. Then why are you looking for momentum trades? And I know that you're trading your live money because you say that's how you learn, and that's totally cool if that's what you want to do. But do you see how you're chasing more instead of keeping it focused? You're chasing more trades. You're afraid of losing out, and you're not even sure what you're doing. So if you're winning or losing, how are you ever going to repeat it? There's a link to the trading rules in Discord. Read them, go back and take 10 pictures of those rules being true. Get some study in. And tell me what you come up with. Show me your pictures and we'll talk about it. Debbie, have a great afternoon. And then Rakesh, one of the things that you can do is there is a way to give yourself the absolute best chance of success. And I hate to say it, but there's some bugs here and there that make NinjaTrader 8 crash every now and then. My brother has a team of programmers working on it tirelessly, sparing no expense to try and give you guys the most stable platform ever. But these stability instructions will help you quite a bit avoiding that. But it may happen every now and then, unfortunately. And I hate that that's the answer that I have to give. So to summarize, guys, keep it simple at first. If you're not making money consistently on an easy plan, don't try to make it harder. Don't give yourself more things to look at. Don't give yourself more rules to try to memorize. Don't give yourself more scenarios. NASDAQ traders, look at those small triggers, up and strong. Look at those split triggers. Look at that gap theory back to the large triggers. You had a wow moment? I love that. Guys, everybody gets to where they want to be. That's my commitment to you. Ask a million questions. Show me a million pictures. Let's do this every day until you get there. I love what I do. I hope you guys are enjoying the learning process. I hope you learned something today. Ziba, what are you confused about? Talk to me. Nubian man, I'll show you right now while I have you. There is. But man, great question. If I open up and I go to the education page, Ziba, let me know what you're confused about. And I go to the software user guide. Here's the videos for it. No, it's okay. I'm here for you, and I certainly don't mind. So Newbie Man, here's the link. And let me put this in the room, but let me open up my NinjaTrader 8 real quick and give you a little help with that, because I think stops and targets are one of the most important things that we do. So I've got NinjaTrader 8 opening up real quick. So ask your question, Ziba. All right, Ziba from Discord. Trading rules, okay? There's your momentum trade right here. So here's the rules, but they're in Discord. And they are also, there's pictures of everything that John talks about regarding. There's ideas of what it looks like. There's pictures that are labeled. So go through and take a look at these and let me know what you come up with if you have questions. But Ziva, I'm also going to say it's in the name. Momentum is in the name. And because it's in the name, make sure that your large chart has momentum before you ever even consider looking for the trade. All right, Nubian, I've got my workspace coming up right now. I'm going to pull it up for you. But go through and look and let me know. Take some pictures, write some questions on it. Yeah, you know I've got you, right? I'm going to take care of you. All right, Nubian, are you with me? So to set up your ATM strategy, Nexgen has already provided you a lot of them. There's a lot of opportunities for you here. And what you can do is you can just pick one of these. So if you're trading the S&P or you're trading crude oil, it's a 2-lot. It's a 12-tick loss, right? 20 and 30 ticks are your targets, 12, 15, and 20. It goes up to 4 lots. I think there's a 16 lot in there for you. So Nexgen gave you all of these already. If you want a custom build, you can click on custom, and it's going to give you this parameters. If you're trading 2 contracts and you want 2 separate targets, you're going to have to add that separate target in, and you're going to have to make sure that 1 contract goes to each target. Stop loss, depending on what you're trading. If it's crude oil or the S&P, I start with about 12 ticks. But I know that I'm going to move my stop outside of that window of opportunities, right? So this gives me reaction time. If I'm trading the S&P, $100 is only 8 ticks away. $200 is only 16 ticks away. So I can put in my values, and then from here, I can just save it as a template. So if I click Save as a Template, it's going to ask me to name it. And I can call it Nubian Man and hit Enter, and then click OK. And then what happens is now I've got that Nubian Man ATM strategy. And then from here, let's say that I want to get in if the market pulls up. And I'm going to sell limit 2 by right-clicking. And I'm saying if the market comes up to the spot I want to be short. And I don't know if it's a real trade. Obviously it's not. I just got run over. So if I buy, that plan puts targets in and it puts stops in. And if I need to move a stop, I can click a line and click again. And if I need to move a target, I can click a line and move it and click again. And I don't know that this is a real trade. But that's what you're going to do. If I need to exit a trade, I can hit close. If I need to, what else is there? There's really no other options, right? But I'm making sure I'm on simulator here because I don't have any idea what's happening on my large chart. Guys, this is not a trade, not a trade, not a trade, not a trade. This is an example. I can close out my position by just hitting close. and it takes me right out of that. And then Nubia Man, if you want to see where you got in and where you got out, you're going to right click and go to your data series. And down at the very bottom, it gives you the option to plot your executions, text and markers, and that should get you where you need to be. So I would say go through and practice a little bit. Practice building it up or using one of the pre-ones, one of the ones that were already there for you. Practice clicking on your entry or on your stops, on your targets. So like limit order, I right click below price, it gives me buy limit 2. If the price comes down and hits my price and it looks like I'm about to lose my NinjaTrader 8, which stinks in the live class, then that would have put me into the market and then I begin to manage it. Does that help a little bit? Hopefully that cleared it up. Did I lose you? You still here? And guys, true story, if you take a trade and NinjaTrader crashes, it's going to keep you in that trade. But everything was green and I'll be darned, the market went up. Pretty cool, right? So guys, that's it for me today. Nubia Man, I'm going to assume that you got the lesson there. If you didn't, follow the link, go through the trade management and chart trader. And if you still need help, let me know tomorrow. We'll go through it again and we'll go through it every day until you're comfortable. Guys, thank you so much for being here today. Thank you for participating. Thank you for all of your amazing questions. I hope that you're getting to the point to where you're comfortable, to where you're